Circle. Circle. Let me see here. I might change that. Let me see. Yeah, let's make it bigger.
Index futures this morning implying very modest pullbacks toward the open after yesterday's declines of about 0.75% in the S&P. Joining us now, Paul Hickey of Bespoke Investment Group co-founder.
Paul Hickey.
Good to see you.
Good to be here.
Plenty to chase around when it comes to trying to figure out what's preoccupying this market, what's driving it. Yesterday, very fascinating. It's trading like it's a binary kind of equation here. Either we get immediate stiff tariffs or we don't, and the market wants to fade if we don't. So how does that leave an investor at this point?
You know, I think what you have to do is you have to reset your expectations as an investor.
Duh.
And reacclimate to the situation we had 4
You
years
gotta
ago.
think like
There's
a
never a dull moment.
conservative,
So we
you
had
dumbass.
constant headlines in the last 2 weeks. We had constant headlines 4 years ago. What's interesting to remember, though, is the first year of Trump's first term in office was one of the most placid environments for the market in history. We had every month of 2017 was up except for March. We were down about 30 bips. The VIX was the narrowest inter-year range on record, and I think the maximum pullback was like 2.5%.
Exactly.
Trough. So, as an investor, I think when you see these headlines and these tape bombs, you just have to take a step back and not try and react to every single news event, because right now, this morning, we're basically on the S&P where we were Friday night.
Paul, why are you wearing a Corona tie?
So it's my trade war celebration. You know, as we were talking, as Senator Schumer was talking about Corona being more expensive in his press conference now. I don't have any avocados with me, but
So in a month, that tie could be 25% more expensive.
yeah. So I had to get it early. You know, avoid the tariffs.
I guess the question when talking about how this might or might not compare to 2017 or whether it's relevant is the initial conditions, right? I mean, 2016, the market had a series of freakouts. We had an industrial recession in the early part of the year, Brexit, obviously a very nervous walk up to the election. Valuations were in check.
I wasn't nervous.
Fed was, rates near zero. So the point is, what matters now over and above what's happening with the administration and trade?
No, that's exactly right. You have to consider where we are right now. So, you know, the market we had last year, we had a very strong year. We had 57 record highs. We had the S&P never closed below its 200-day moving average. So in those kinds of environments, you're setting yourself up where there's not a lot of margin for error. Hence, you saw the market sell off quickly on a hair trigger fashion last
smart.
Monday with DeepSeek, and you saw it this Monday with the tariff news. So you have to take that stuff into account, where certain events which may have been reacted to in one way a year ago are going to be reacted to differently now. So I think in that respect, gains are going to be harder to come by. You're going to see more volatility in the market. But overall, underneath, and you look at the reaction, what we saw last Monday and what we saw this Monday is dip buyers were quick to get in. We had a very strong reversal.
So what's the takeaway, Paul? Are tariff dips buying opportunities from now on?
Duh.
So I think to the extent where what the actual tariff news is, if it's just a talk, say we're going to do this, that's one thing. If it's actual implementation of a policy, there's going to be a short-term period of volatility in that, and so you have to adjust to what happens. But in the long run, I think the markets will adjust to it.
Okay.
The economy, which
For the record, 2018 was a flat year.
it was a flat year.
Now maybe it was because 2017 was a good
Well,
year.
2017 was all about the anticipation of the tax cut.
of the
going
tax
through.
cut, but then
And then you
2018
had
was
more
flat because of tariffs.
It was a monster year. So, and we had a strong gain. So I think in that respect, you know, as we came into this year, we're not looking for the type of gains we saw in the last 2 years.
Right.
And it could be treading water. But in that environment, I think it's a market where we're just treading water for the year is better than some of the alternatives that you have in, say, fixed income or other
But
asset
the
classes.
implication of what you're saying is Trump's bluffing on tariffs by the dip.
Well,
That the story?
or if not bluffing, I mean, I think it does make sense to actually also take account of the fact that we do not have an S&P 500 that is about the net trade balancing goods. I mean, that's not really the big swing factor in terms of whether our economy performs or whether corporate earnings do
Right.
well.
No, but it is
It's
part
a
of
small-
Trump's beliefs
No,
just
of
in terms
course.
of getting jobs back here. And
Of course, but my point is like the market is not so acutely tethered to what is going to be the terms of
I
trade.
think that's one factor, but
Really
the
great point.
bigger picture is you have the economy, which is doing good. You have earnings season, which is coming in very strong, and you're not really hearing a terrible. You're not hearing companies lowering guidance saying, "Oh, because of these tariff environments, things are going to be bad."
well, Diageo did, just
Well, so
to be clear on that. There
they're
are
importing a
occasional
lot.
ones,
Consumer
yeah.
discretionary is
45% of
pretty hit, too,
Diageo's.
Yes, but okay, so the tariffs coming into this election, tariffs were always a con of the Trump getting elected.
Right.
The pros are increased government efficiency, and what we're seeing is overshadowed over the weekend is, you know, you remember the 80s when defense companies were spending $600 on a bolt or, you know, $1,000 on a toilet seat. They're starting to expose some, you know, excess spending, and if we can get a more efficient government spending, I think that's a pro that we have to think of it. And these companies that are generating the bulk of their revenues from federal spending have been decimated since the election. They were outperformed over the last 4 years. We call them the Doji dogs. And since election day, they have given up all their outperformance over the last 4 years.
Well, do you remember the last thing that Hassett said to us, Becky, yesterday was, we're going to do the president's budget, and we expect when we put all of the policies in, we expect
Yeah,
there to be substantial growth.
And the question is how you measure that growth, because we've also had a Republican congressman last week on Friday who told us that, look, they weren't going to be looking at the CDO scoring anymore because they didn't think it took dynamic growth into account enough with those things too. So look, the one thing this does is make people who are used to things being done in the existing framework very uncomfortable, because there's a lot of change.
Things have been shaken
abrupt
up.
change, and it's going to be hard to try and figure out how to meld and put it all together.
And the uncertainty, I think, Steve, you talked about this yesterday, the uncertainty index about companies.
Yeah, the blip,
is that is certainly, you know, that's one of these cons. The tariffs, that's a con. So you have to balance the good with the bad. And I think less regulation and lower taxes are going to help to offset some of the uncertainty and the potential of tariffs.
We're in a place, Mike, is Trump a buy, a sell, or a hold?
You know, it's funny. I just never.
Or maybe
I
I'm
never
overstating
think
it.
of the market as actually being that hinged to the president.
But
At
yesterday
any
was,
given
it
moment
was
in
pretty
time.
hinged.
Sure. But again, I keep saying we've been kind of chopping around this area for 3 months, and I think you could look at the way the markets perform, Paul, and say we got a big gut check on the AI theme.
Right.
A week later, you know, you have kind of an aggressive tariff gesture, and the market just keeps kind of hanging in there and chopping around.
We always say to clients when they ask about the president's going to do this, no matter what party the president is from, take a step back, ignore it. There's market and the economy is much bigger than who is in DC. They can cause short-term issues, but Obama and Trump, okay, in the 3 best performing sectors under President Obama were the 3 best performing sectors under President Trump. They are 2 completely different presidents. So in that respect, look at the bigger picture and not just focus on what's going on in DC.
So the question is Trump a buy, a sell, or a forget about it? That's what right?
I think you want to buy it.
Good reminder. Thanks, Paul. Good to
Thanks.
see you.
Good to see you.
All right, Pepsi just out with quarterly results. Earnings of $1.96 a share beat estimates by 2 cents. Revenue came in at $27.78 billion. That was slightly below expectations. Pepsi realized organic revenue growth of 2.1% during the quarter versus estimates of 2% growth. For the full year, Pepsi says that it sees core earnings per share growth in the mid-single digits. The street was expecting growth of up 4.6%. You can see that stock right now off by about 1.5%. And then there are shares of Spotify, which are rising after earnings and revenue beat expectations. The company also offering some upbeat guidance Results were driven by strong user growth, price hikes, and cost cutting, and I think they've just completed their first profitable year. That stock right now up by about 8%. When we come back, Palantir shares are soaring. We will show you what the company reported right after this. Check that out. Up 20% this morning. Also later, quarterly results from Merck and Pfizer are expected just in the next few minutes. We'll bring you those numbers and the reaction on Wall Street. Squawk Box will be right back.
Supply.
Shares of Palantir are sharply higher. Earnings for the company of 14 cents a share beat the street's expectation of 11 cents. Revenue came in at $828 million. The street was looking for $776 million. Current quarter guidance also came in well above expectations, and the full year sales guidance was also higher than expected. In the earnings release, the CEO, Alex Karp, said that the results demonstrate the company's deepening position at the center of the AI revolution. I think they talked about organic growth, basically, that couldn't be stopped. That stock is up by about 20% right now.
It's been one of the wildest, hugest outperformers of the last year. It's doubled since the election.
Was it the largest gainer last year?
The best in the S&P 500. Now, it went into the S&P during last year, but yes, of those stocks that finished in the S&P. And just a real fevered following by retail investors.
Right, but now look at it, 1 year up
Yeah.
488%. I think yesterday we were talking about up 360.
300
So
something,
massive, massive gains. Also, we've got Dow component Merck just reporting earnings. Listen up, everybody. Earnings came in at $1.72 a share. That did beat the street's estimates of $1.62. Revenue came in at $15.6 billion. That beat estimates of $15.5 billion, but revenue guidance for the full year did come in below expectations, and the range for full year earnings guidance was mostly below consensus as well. Merck also said that it is temporarily pausing all shipments of its HPV vaccine, Gardasil, into China beginning this month and through at least the middle of the year. The company flagged last summer that those shipments were way down. That came as a shock to the street at the time. Just a few weeks ago at the JP Morgan conference, the CEO, Rob Davis, said that they were seeing the situation stabilize. You can see right now, shares of Merck are off by about 3.4% this morning. Oh, let's take that back, 2.8%? Okay, it's bouncing around. You're going to see some early movement as people try and get their arms around these numbers and figure out what they think about the guidance.
We have a guest coming up to discuss this, I believe.
Yes.
Okay, the next hour. Coming up, how retailers are preparing for tariff uncertainty. Courtney Reagan gives a special report next. And as we head to break, a look at yesterday's S&P 500 winners and losers.
Mutual.
Good morning, everybody. everybody. Welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. The futures this morning are a little bit of a mixed picture. The NASDAQ's actually picked up. Before we were looking at all of the major averages, the futures in the red. The NASDAQ right now looks like it's up by about 11 points. Dow futures are down by close to 100. The S&P futures down by about 5.
Tariffs against our North American trading partners are on hold while China announced its retaliatory measures against tariffs that went into effect at midnight. Joining us now with the potential impact on the retail sector, Courtney Reagan.
We got to do our homework anyways, right, Steve? Because it sounds like they're gonna come, at least as of right now. So sourcing, as you know, is held really close to the vest for a lot of retailers. But the details in this case really do matter when you're trying to evaluate tariff risks. So the good news is, at this point, most analysts surmise the risk is manageable if there's no universal tariff. So retailers had begun to diversify away from China before the first Trump administration's tariffs. The bad news is some of it was nearshoring to Mexico. The share of shoes imported from China has fallen from more than 55% in 2017 to about 42% in 2021. At the same time, footwear imported from Mexico has risen to 2.1% from 1.6%. So still small, but according to the U.S. International Trade Commission. Now, in 2013, almost 38% of apparel sold in the U.S. was imported from China. In 2023, it was just a little more than 21%, shifting to mostly other Asian countries, so not Mexico in that case. However, more than 20% of denim is sourced from Mexico, according to the American Apparel and Footwear Association. But Levi Strauss CFO says it sources just 5% from Mexico, less than 1% from China, calling both immaterial. Abercrombie calls Mexico sourcing immaterial as well, though Contour Brands, the maker of Lee, Wrangler, and other denim brands, does have 38 factories in Mexico. Now, tariffs on Canadian imports and additional tariffs on China-made goods is trouble for Best Buy. Those two countries, top two countries of import. And Boot Barn, too. 30% of its goods are made in China, 25% from Mexico. Around half of Steve Madden's sales are products imported from China or Mexico. Now, Home Depot says only that it will source the majority of its goods from North America. So some portion of that is likely lumber from Canada, and a big starting point for home improvement projects. So the retailer has always noted that lumber price volatility can dramatically influence spending trends. So that's one that we are a little worried about there, but we don't have a lot of further detail on the breakout.
Are they taking actions, Courtney, to...
So almost all of them are sort of saying, you know, we're going to wait and see. But what we know is that if and when the price increases come down for consumers as a result of these tariffs, again, we know the timeline is sort of moving, but let's work on the information that we know now. It won't probably happen until early summer because most of the other products they're already here. They've already sort of been accounted
What I think's
for.
been so interesting is with the orders, I think for back to school orders, everything's now being negotiated with these clauses that say if tariffs are put into play, we're going to renegotiate the prices. And you know, it's that sort of clause that is going to just be commonplace now.
Absolutely, absolutely. I mean, it almost seems silly not to put something like that in there, right?
Why didn't we do this before? Right?
Exactly. And so I think just like everything,
force majeure.
Right, and the bigger you are, the more potentially you can absorb it, the more multi-category you are. So a retailer like Walmart, yeah, they're probably going to have to pay more for avocados from Mexico and strawberries from Mexico, and we know grocery is a big part of their business. But maybe they can use the levers of the other categories that aren't subject to tariffs to sort of even out that margin.
Did I read something, Courtney? I'm looking for this right now. About an overseas retail manufacturer that's moving stuff back to the United States?
I mean, there are many of them that are trying to at least, I would say, nearshore. United States, you'll have to come up with a name for me on that one because it is tricky because we don't have the skilled labor in the United
shoe
States.
company Steve Madden announced
Yes.
from the White House announced plans following President Trump's election victory to rapidly have its Chinese production due to the prospects of tariffs.
Yeah, so they're having their production, but not necessarily moving to the United States.
Okay, thank you.
Yes, exactly.
Thank you, Courtney.
All right, when we come back, uncertainty around tariffs complicating an already tough cycle for spirits producers. We've got the CEO of Victor's Distillery who will join us next on how they might be able to weather both U.S. tariffs and retaliatory measures in an environment where consumers were already buying less spirits. Also, a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app and you can listen anytime. Squawk Box, we'll be right back.
Restrictions apply.
Spirits maker Diageo withdrawing its medium-term guidance because of what they are citing as macroeconomic and geopolitical uncertainty. The company's CEO saying the prospect of tariffs could hamper its ability to recover falling sales, also saying that it added further complexity to its ability to provide updated guidance. Shares of Diageo down overnight, tumbling to their lowest level since March of 2020 before paring those losses. You can see that stock right now indicated off by about 1.7%. Joining us right now to talk about the potential impact of tariffs on the spirits business is Joe Magliocco. He is the president of Michter's Distillery and its parent company, Chatham Imports. And Joe, it's great to have you here in studio.
Thanks so much for having me on.
We've been talking to you for years about this, since
Yes.
the last Trump administration, when
Yes.
there were tariffs that were put on place that impacted your business. What I'd like to know is how you kind of navigate this as a business leader, as somebody who is steering through all of this. What's the uncertainty mean? What are you doing? What are you seeing?
Yeah, I mean, obviously there's a great deal of uncertainty at this point, and things just keep changing. You know, I woke up this morning and I saw the China tariffs, 10 to 15% on certain American goods, restricting key mineral sales to the U.S., antitrust probe of Google, et cetera, et cetera, et cetera. So it seems to change really, really quickly. There's just so much news over the weekend. It really affects us with, Mexico, where our number 2 item, Los Siete Mysterios Mezcal, comes from Mexico. We import it. It's an important item for us. Michter's, our sales of Michter's in China. China is very receptive to American spirits, especially American whiskey. And our Michter sales, I was surprised. They were up 58% in China last year, in 2024.
Wow.
So even though the market's small for American whiskey, it has tremendous promise, and the Chinese accept things very, very well from us. Canada's our biggest export market, so there's a lot to do. There's a lot of hand holding. I spoke to our Canadian importer yesterday, and who was a great, fantastic company, fantastic people, been great partners. There's a lot of. I was on a Zoom with an American distributor yesterday. They were just saying how they're so happy that they've stocked up on Canadian whiskey. They're so happy that they've stocked up on tequila. And now I think, especially with the 30-day suspension of the American tariffs on Mexican products and on Canadian products, I think you're going to see a lot more stocking up.
Are you doing that? Are you bringing in as much mezcal as you possibly can?
Absolutely. Yesterday we've already been concerned about it and taken a bigger position than we normally would. And it's interesting because this comes at a time when distillers and importers and retailers have been trying to destock because interest rates are so high. Yeah. Relative to how they have been.
So it costs you more to hold on to all that inventory.
Absolutely, but given these substantial tariffs, it really makes.
Was your whiskey taken down off the shelves in Canada yesterday?
Well, it was announced that it was going to be taken off the shelves today. Ontario, Quebec, Newfoundland, Labrador, Nova Scotia, and it's interesting. British Columbia took a different tack. They said that they were going to stop buying American spirits from red states. So that's a little bit of a different tack. This is stuff I've never seen before.
Aren't you?
I'm sorry?
You're in Kentucky, aren't you?
Yes.
So that impacts you.
Yeah, absolutely.
Yeah. So let's.
But one bit of good news is that again, things keep changing, Steve, so fast.
Yeah.
Late last night I saw that Manitoba last night announced that it was because of the 30-day suspension of the American tariffs that they were going to suspend their removal of American spirits for 30 days.
Does it matter, though, because we saw the Canadians booing at NHL games for the Star Spangled Banner? Are Canadians going ahead and continuing to buy if they're on the shelves or not?
It is a wonderful question, and that's something that, again, when I was speaking to some Canadian friends yesterday, I was talking about, Canada has been a terrific partner. The provinces in Canada pretty much run the alcohol business. Mm-hmm. Whether it's British Columbia, Ontario, they have absolutely beautiful world-class stores. Ontario, for example, has been a great partner for American spirit companies. They stock over 3,600 American alcoholic beverages in Ontario. They buy them from over 35 U.S. states, and they say that they have imported last year $965 million Canadian of American spirits. So, big question mark is, the American companies try so hard with their foreign partners to cultivate, and establish, cultivate countries and establish American spirits there. Question, what happens to the goodwill?
Right.
So
does it change whether these tariffs go into place or not?
I think short term, I think it absolutely does. But again, look, I'm looking at it from the narrow perspective of somebody who's trying to sell some booze
Sure.
and import and export and stuff like that. We do run huge deficits. Our deficit with Canada is over $50 billion.
No, it's not. It's 40 billion, and it's all because of oil.
Well,
it's not a huge deficit.
well,
it's 4% of GDP.
I got
4%
from
of the total
the
trade number.
I looked at the U.S. Census Bureau for
40 billion.
11 months of, but whatever. But we there are reasons why the government does stuff. I mean, I can understand concern about border security, and governments have to think about a lot of different things. But from the narrow perspective of trying to import and export spirits, it's a real challenge.
So have you talked to any lawmakers here in the United States about any of this? The White House, local?
I have not. I think that is really really is a government issue.
But your industry certainly has representatives talking about
absolutely. Yeah, I'm absolutely.
Joe, walk us through your weekend. We all worked really hard, but we didn't have employees and product on the line. Who did you call? What were kind of emergency situations that you were preparing for?
Preparing for goods being pulled off the shelf in Canada. What do you do?
Right.
Now that's a new situation I haven't faced before.
Were you on the phone with Mexico ordering product this weekend?
Yesterday we were.
Yesterday.
Yeah, I was on the phone with our own people, planning what we were going to do with Mexico over the weekend. But then yesterday we ordered more mezcal. But you really have to stock up, and keep your fingers crossed and hope for the best.
Your business, how much of it is Canada, Mexico, China?
It's significant, as I said. Our number 2 spirit item, Los Siete Mysterios Mezcal, is from Mexico that we import, and the U.S. is a big market for that. We were up 58% in China. Canada is probably over 20% of our export business. In our export business, we export to 80 countries plus, and it's significant for us. And I think there's a lot of, I think hopefully this stuff gets worked out, because I think there's tremendous upside internationally for American whiskey, because the market share compared to Scotch and the market share compared to cognac abroad is quite small.
Joe Malioco from Michter's Distillery, we really appreciate you coming in and walking us through all of this, Joe.
Thank you so much for having us. Really appreciate it.
Thank you.
Thanks.
Just to be.
I'm sorry.
Wait, we're still on.
Coming up, the governor of Delaware speaks out about companies leaving his state. That is straight ahead. And later, Senator Peter Welch joins us to talk about Elon Musk's influence as he slashes his way through the U.S. government. Squawk Box will be right back.
got this.
Pfizer out with quarterly results. Earnings of 63 cents a share. That tops estimates of 47 cents, and that's on revenue of $17.76 billion. That's against expectations of $17.36 billion. For the full year, Pfizer is affirming its earnings and revenue guidance. See the shares responding up about 1.5% in response to that. Meantime, shares of Merck taking a leg lower. Earnings and revenue beat estimates, but guidance came in well below expectations. The company is temporarily halting shipments of its HPV vaccine Gardasil to China through at least mid-year. We'll talk to an analyst in the next hour. On Merck, the shares down almost 7%. Squawk Box will be right back.
Supply.
It is 7 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Mike Santoli and Steve Leisman. Among our top stories this morning, China retaliating against the United States just minutes after the 10% tariff on all Chinese goods coming into the U.S. went into effect. Beijing targeting everything from U.S. technology companies and crude oil imports to rare earth metals. Salesforce is reportedly cutting 1,000 jobs, even as the company is also hiring salespeople to sell new AI products. Bloomberg says it's unclear which divisions will be affected, but those workers will be able to apply for other jobs. Salesforce has declined comment. And shares of Palantir are sharply higher after its latest full-year sales outlook blew past analyst expectations, thanks to what the CEO, Alex Karp, describes as, in his words, untamed organic growth in demand for its artificial intelligence software. That stock hitting an all-time high, and with this latest move, it's up, wow, keeps growing. The 1 year up now 500, almost 500%, 492%, the gains there, better than 20% just this morning.
Meta is reportedly weighing a move of its incorporation out of the state of Delaware. Last month, online storage firm Dropbox obtained shareholder approval to move its incorporation from Delaware to Nevada. And last year, Elon Musk moved to reincorporate his companies in Texas and Nevada after a battle over his pay package in Delaware. Joining us now, Delaware Governor Matt Meyer. Matt, Governor, thank you for joining us.
It's great to be here. Good morning.
So what do you say about these companies potentially leaving the stalwart Delaware as the place to keep your corporation?
Well, the truth is, in business, companies are always potentially leaving. They're always potentially coming. It's just a matter of what leaders are going to go out and win the business. For over 100 years, Delaware has been the incorporation venue of choice for all the leading companies in the world. Today, as I speak to you, nearly 2.2 million entities are registered in Delaware, over 2/3 of the Fortune 500 companies. 81% of US IPOs last year were incorporated in Delaware. We're leading the way. We understand there are threats to Delaware supremacy. That's happened a lot in the last 100 years. And what I'm saying is we're going to be out front, making sure we win this business. If companies have already left, we're going to work to win them back.
Is Elon Musk and others, are they right that the Delaware courts have become, I guess, too liberal in taking care of minority shareholders?
Yeah, I don't think it's a question of liberal conservative. I think there's a question of balancing stockholder and management rights. It's been an issue for as long as there's been companies registered, not just in the US, but across the world, to make sure we balance those rights. I understand that some feel that in recent years, a number of court decisions haven't gotten that balance right. So I'm saying we need to take a leadership role. We are the business court of choice for companies across the world, and we're going to roll up our sleeves, listen to what customers, listen to what company leaders, listen to what the leading law firms are saying, and make the changes we need to make.
Governor, you're a business attorney yourself. What do you think the problems are? What needs to change?
Well, as a business attorney, you first survey the landscape. What's unusual is not only am I a business attorney, the lieutenant governor is a business attorney. We've been in office now, it's our 14th day. The Secretary of State, who's been in office less than a week, she's a business attorney. It's the first time we've been able to say that in Delaware's history. I'm not sure if there's another state in the country that can say that. So in terms of personnel, anybody running a company out there knows that personnel and leadership is among the most important thing. We have the leadership skills to get this done and to make sure that Delaware remains the preeminent jurisdiction.
What do you hear? Because Delaware has been the premier choice for a very long time, as long as I can remember in any of these issues. Never heard of people picking up and leaving like this in mass before. So what do you think needs to be done?
Well,
How
first
can
of all,
Delaware
just
force them back?
Thank you. I understand for those on social media and watching TV every day, it might seem like everybody's leaving. The data suggests otherwise. As I said, we have more entities registered in Delaware today than ever. Having said that, there are issues. We're just starting our survey of the corporate landscape. What we're hearing, one thing we're hearing, just to be completely frank, I was a 6th and 7th grade teacher in addition to being a corporate lawyer, and I had a student who every Thursday he refused to go to recess. And the reason he refused to go to recess was the teacher who was the proctor, the recess proctor, he felt like didn't treat him fairly. And anytime he'd go out on recess, he'd get in trouble when she was there. And I'm hearing something similar from a number of Delaware companies and attorneys, that they feel like they get the same judge every time when they come to Delaware Business Court, and they don't feel like they're getting a fair hearing.
So who are the judges? Are there judges who are now on the target list of being the bad proctors on the playground?
No, I don't. It's not limited to just one judge. I think it's more about how the judge is selected. If you feel like every day you're getting the same recess proctor no matter what, and there are a number of people who can preside over the case. We need to look at that and just make sure not only is it actually fair, but there's an appearance of fairness to any litigant that comes before our court. Quite frankly, it's true in our business courts and in our criminal courts and our family courts as well.
Mike, I want to bring you into the conversation because I think you know a thing or two about this. Governor, hold on one second. I just want to bring our my colleague Mike Santoli on this. I thought the problem was the rights of minority shareholders. That there was no problem with majority shareholders essentially running roughshod over the rights of minority shareholders, and that,
right.
I mean, are we making a huge deal here over the fact that a judge declined Elon Musk's $55.8 billion salary?
I mean, arguably some companies are making a lot of that, but it probably has become somewhat easier with a lot of these proxy voting mechanisms, and it's become common when we're activist shareholders to just get this tiny little foothold position for the purpose of making a big
lose
public
all the
show.
time.
Of course they do. It's not as if they have their way.
Governor, I don't know. I understand that maybe you need to make some changes, but I'm just not clear. And I understand Dropbox is a big deal, and Elon Musk is a big deal, but I just don't know. You don't want to give up the right of minority shareholders to have a say in the company.
Various studies have showed over the years that by incorporating your company in Delaware, it creates additional value for all shareholders. And so there's a lot that contributes to that. I know that there's a temptation to focus on one case, whether it's Musk or whatever the rationale is for Dropbox or others leaving. We're looking across the sector, as I said, nearly 2.2 million entities, understanding what is driving at least some sentiment out there that Delaware is no longer the venue of jurisdiction, and making sure we address that. So, it's easy to focus on a single case. It's easy to focus on 3 or 4 or 10 companies posting on social media or sending out press releases. We're doing a much broader sweep than that.
Can I just ask how many judges are there in the
7.
in the court?
In a business court, there are 7.
So if you are worried about, I mean, that's not very many proctors on the recess. If you have some that are seen as not friendly to business, how long do these appointments last?
They're 12-year appointments.
But it wasn't like you had a sudden changeover in judges, is there?
No, that's accurate.
So it's the same judges just making different decisions that appear to have rankled some.
Yeah.
Exactly. But, I mean, obviously, some companies have made big decisions about what's going on.
Governor, what I'll say is, even if you think this is a perceived problem and not a problem in reality, once you see any sort of a competition, businesses will use that to try and say, what can you do for me to keep me here? It starts the negotiation. It starts the game that plays out one way or the other.
Absolutely. We also think that if attorneys and C-suite execs actually look at the facts and the law and our process here, they're going to choose to stay here and not go to Vegas and roll the dice.
Governor, thanks for joining us. Let's monitor this issue and hope you can come back again soon.
Great, absolutely. Thanks a lot. Have a great day.
Governor Meyer. Mike?
Markets continue to seek clarity around President Trump's tariffs against Canada, Mexico, and China. With us now is Joe Amato, President and Chief Investment Officer at Neuberger Berman, which has $508 billion in assets under management. Joe, good to see you.
Good to be here. Thanks, Mike.
Thanks for coming in.
Sure.
So let's talk about first, I guess, what your fundamental premise was for the economy and markets coming into this year, and how, if at all, does the whole trade policy flux influence all that?
Well, we came into the year thinking that growth in 2025 was going to be better than consensus, and some of the deregulatory issues that came out of this new administration, or were expected to come out in the animal spirits that were being created, was going to help growth. So our team thinks we were going to be 3 percentage points, tenths of percentage points higher than what the consensus was. Now, we did say we thought the first couple of quarters of the year were going to be tricky, because there was a new administration. You certainly had the tariffs issue hanging out, which came to light, of course, over the weekend. I think you've seen some volatility in the bond market late last year. The bond market sort of calmed down this year. So I think the administration is still getting its footing, but certainly the speed and scope of some of the things that they've initiated, tariffs being the latest example of it, it was a bit surprising.
And so surprising, I guess, maybe some people have a strong view as to whether a certain percentage of tariffs on some countries is this inflationary for this period of time, or it's this much of an impediment to growth. I think what you can say for sure is I've been talking about it being, it's kind of sand in the gears of trade and it's dust in the eyes of business leaders, right? It's kind of like an excuse to do less in terms of committing capital and business. So how does that play out? Are we making too much of it? Do we just want to get to some kind of stable equilibrium on, okay, I guess this is going to be what the rules are, and go from there?
Well, I think tariffs certainly have important implications. If these tariffs were imposed over the course of a full year, the expectation we would have is that growth would probably be maybe as much as a half a point lower than what our expectation was. We thought that inflation could be as much as a half or 3/4 of a point higher than what our expectation was for over the course of the year. Those are meaningful numbers, right? So it is something that, of course, we have to pay attention to. Now, how much of it's a negotiating point? I think the weekend yesterday gave you some sense for that. That was our expectation, but you never know, right? China comes in overnight and retaliates, and you've got another few months that there's going to be a review on China tariffs, so there's probably another bite at the apple when it comes to China.
Joe, take me to 29 days from now, the night before the 30 days expires. Client calls you up, says, Joe, tariffs tomorrow or something. What do you tell them to do?
I think, and interestingly, we spent a lot of time Sunday night, talking with our portfolio managers, first trying to figure out what our view was. So, I think in light of the economic decline that we would expect if tariffs were in place that I referenced, I would say equity markets are going to trade off on that. We saw that yesterday on the initial reaction, and so markets worked its way back. But, I think if it ultimately leads to lower earnings per share growth, right? This year, our view on equities was not a lot of multiple expansion, probably none. So it was all going to be driven by earnings. Now, if you had tariffs imposed and you're going to see a 3 to 5% decline in S&P earnings, that's not an unreasonable expectation of how the market would pull back. And there you want to sort of pull back, wait, and then pick up, the pieces, if you will, because still long term, we think the growth environment is constructive.
Yeah, so in other words, you think that this is still an expansion and a bull market that is underway and intact, and these are just going to be little
tricky couple of quarters, but long-term growth expectations better than we had going into the fourth quarter of last year.
So a pretty decent starting point. Joe, good to see you. Thank you.
To be here.
Can we give credit to the poetry of Mike Santoli? Sand in the gears, dust in the eyes.
I think by my saying it on the air, I copyrighted it, I hope.
That's good stuff.
I'll repeat it till you're sick of it.
Good stuff.
He's stealing it for lyrics.
I'm going to steal it, absolutely. Are you kidding me?
All right, when we come back, we've got some new data from Amazon about their Prime service. We will speak to the Vice President of Amazon Prime about that. Also, China's tariff retaliation. And in the next hour, Kathy Wood of ARK Invest will join us to talk about her investments, tariffs, and market reaction. Squawk Box, we'll be right back.
Insurance.
All right, welcome back, everybody. Amazon has released new metrics for Prime deliveries and savings. In 2024, Amazon says that it delivered 9 billion items the same or the next day around the world. Joining us right now for more on these numbers is Jamil Ghani, who is Vice President of Amazon Prime. And Jamil, these are pretty impressive numbers. Why don't you dig into what this is and how it compares to where you were a year ago?
Yeah, absolutely. Thank you for having me this morning. We launched Prime in 2005 with a very simple promise: 1 million items available in 2 days. You fast forward 20 years, and now we're delivering to Prime members over 300 million eligible items. Of those, over tens of millions of items are available same or next day. As you said, last year there was 9 billion items available in that record speed. We think about this in two ways. It saves our members time and money. If you quantify the savings in delivery fees, that's $95 billion worldwide. For the average US Prime member, that's $500 of savings. And then you almost can't put a price on the amount of time savings that they're getting as well. So we're really, really proud of the record-breaking speeds in 2024. We're only going to get faster. We've invested in 60% more same-day sites, covering 140 metros. That's particularly helpful for our everyday essentials business. This is the toilet paper, the detergent, all the things a busy family needs. We deliver over 2 billion items, 50% more than the previous year in 2024. And that just opens up more and more occasions where busy families like mine can access Prime and get what they need when they need it.
I mean, I think about how it works at my house, and there are a litany of delivery options that show up at all hours and all times. Sometimes I order something, it'll show up at 4 a.m. before I even leave to come here, which is a little creepy as I'm walking out the door. But you guys have this incredible logistics business that you have put together to make this happen. How much investment has gone into that? And how do you see that changing and developing over the next year? I guess drones are part of that too.
Yeah, absolutely. We've been investing for over 30 years. The entire history of the company is about, every year iteratively making the supply chain network better. The big thing I would draw is over the last couple of years, we've made a major transformation in the layout of our network, moving to a regionalized network. That puts selection that households like yours and mine need closer to the customer. It doesn't change the operations in the building, so we have the same high standards for safety and kind of operational excellence in the building, but what really changes is that your package is traveling fewer miles over the road to get to your house. That means you can, leave the house with that package that the kids need for school that day or you need in the office, like you just described. We're also investing and have been investing for decades in machine learning and other AI. That allows us to make sure that we know what customers want, when they want it, where they want it. It allows us to have perfect placement into our buildings, again, as close as possible to the customer. Last thing, you mentioned drones. That is a growing part of our business. We're just getting started though, and that will be for the ultra fast, really time sensitive items. A big part of that is our pharmacy business. We're rolling out more and more selection through our pharmacy business that will be available in the same day. When you can go to the doctor and have the prescription you need at your doorstep later that afternoon, again, it's a game changer.
Yeah, I'm still trying to figure out if it's worth it given the drone traffic it may put up and the panic that it causes in places like New Jersey with all those drones. Jamil, let me ask you, how many Prime members do you now have?
We have over 200 million Prime members worldwide in 24 countries.
Jamil, I want to go back to what Becky was talking about. Yesterday morning, before I came in the Squawk Box to cover crazy tariffs, I ordered coffee. By the time I got home at 3 or 4 o'clock in the afternoon, the coffee was there. How soon after I hit the button to pay for it did you start moving that coffee?
Almost instantaneously, virtually instantaneously.
I'm going to hit the button, and the coffee's going to start moving.
It's going to start moving. We're gonna pick it from our FC, increasingly really close to your home. We're gonna package it. We're gonna slam it, otherwise get it out on the transportation means, and then send it off to your home. We're obviously consolidating and creating route density so that we come to your household and your neighbor's household and can do that really efficiently. We may already be coming to your household that day, and that package is on its way, and then you can simply track it in the Amazon app and know exactly when it's going to arrive at your home.
And then I have one question, since you're always up and down my street, when are you going to start using electric or alternative fuel vehicles?
Well, in fact, we already are. We have the nation's largest electric vehicle fleet. We have over 20,000 electric vans on the road and orders for more, and we're rolling those out not only in the U.S. but around the world. And we're really proud of the investment we've made to advance that technology and put it to work. Those vehicles are optimized for our drivers. Not only are they electric, but they have really efficient layouts inside, and our drivers tell us that they love them.
Jamil, let's talk about tariffs and the tariffs that were recently averted by both Canada and Mexico, and then the ones that have been placed on China. We have been reporting and talking about how Amazon could be a beneficiary of part of the tariffs that would be put in place. Chinese competitors like Temu and Shein have found ways around any of these tariffs in the past because of the de minimis clause. Anything that's under $800 gets through and escapes that. President Trump closed that loophole in the tariffs that he'd been proposing most recently in that executive order he put out. And that could be something that would really help out Amazon from a competitive perspective. What's your thought on this? What's Amazon's position?
It's clearly, as you've reported, it's a really dynamic situation, evolving hour by hour, day by day. And so we're assessing the impact to our business closely. Our number one priority is minimizing disruption for our customers. The good thing is that we have been investing for decades in a diversified supply chain, working with vendors and sellers around the globe. And we're going to continue to do that to make sure that we minimize the disruption to our customers. We look forward to working with the administration to do exactly that. We're here to serve customers and Prime members, and we, no matter where the situation goes, we're going to focus on that.
Was there hoarding ahead of the tariffs or bringing in additional? We talked to a distillery company a little bit ago, and the CEO said that, yeah, they did in fact bring in as much as they could. Yesterday they were placing orders for mezcal to get ahead of any potential tariffs that would come in down the road. What are you all doing specifically?
We're always assessing the state of inventory and the placement of that inventory, no different than we do before the holiday peak period or before Prime Day. And so that's an ongoing effort, no different than any other day. So we continue to monitor the situation as it continues to develop, and we're going to do what's necessary in order to minimize disruption for customers.
Jamil Ghani, want to thank you, Jamil, for joining us today.
Thank you so much. Appreciate it. And I hope you continue to enjoy those speeds and that coffee.
All right, up next, stocks to watch ahead of the open, plus the world's richest man, Elon Musk, upending federal agencies to overhaul government and slash spending. But does he have too much power? Senator Peter Welch joins us to discuss that. Squawk Box will be right back.
Time now for today's Aflac trivia question. What year was Facebook launched? The answer when Squawk Box returns. apply. And now the answer to today's Aflac trivia question. What year was Facebook launched? The answer, 2004.
And welcome back to Squawk Box. I'm Dominic G with a check on your morning movers and stocks to watch. Some big earnings stories this morning. We'll start with PepsiCo reporting earnings in just the past hour or so. Shares are down roughly 2.25% right now after posting mixed results. The Doritos and Mountain Dew maker beat fourth quarter profit expectations, but revenues came in below estimates as North American demand for the company's snacks and drinks faces some headwinds and consumer pullback. PepsiCo is also still feeling some of the effects of a recall at its Quaker division this last December, so watching PepsiCo shares down about 2 1/3%. Also, two big pharma names reporting results before the bell. Those stocks are diverging a bit, as you can see here. Merck falling roughly 8.25% despite posting a beat on earnings and revenues, but its guidance disappointed investors with the full-year revenue forecast coming in below some expectations. The company also said it's temporarily pausing shipments of its HPV vaccine to China. Meanwhile, Pfizer shares are up just around 2% or so after the company reaffirmed its earnings and revenue guidance for the full year. The company also beat its fourth quarter estimates, with revenues growing 21% on a year-over-year basis. Pfizer was helped along by, amongst other things, better results from its COVID product sales. And then let's call your attention to what's happening with PayPal. Shares are sliding more than 6.25% right now, despite reporting better than expected fourth quarter results and issuing guidance that topped analyst expectations. But total payment volume could be a concern. It came in just short of estimates, and PayPal's take rate slipped from a year earlier period. The company also announced a $15 billion share buyback program, saying it expects to make around $6 billion in repurchases throughout the course of this year. So a balance of news, but 6% decline for PayPal. Becky, I'll send things back over to you guys.
Yeah, that is a big move to the downside. Dom, thank you very much. We'll see you in just a little bit.
Sure.
When we come back, one bank bucking the return to office trend. We have that story next. And then Elon Musk moving with speed to rework the federal government. But does he have too much power? We're going to hear from Senator Peter Welch about that and much more. Squawk Box, we'll be right back.
10% off. Terms apply.
Citigroup CEO has told top executives the bank will continue to allow most employees to work remotely at least 2 days a week. That bucks the return to office trend of other major banks, including JP Morgan and Goldman Sachs. The Financial Times reports Citi CEO Jane Fraser believes more flexible work requirements give the bank a competitive advantage.
All right, coming up, Senator Peter Welch on the role of Doge and Musk's relationship with President Trump. And later, Merck and Pfizer, both reporting earlier this morning, got a tale of two pharma companies. We're going to talk pharma and China's tariff retaliation impact on the sector. Squawk Box coming right back.
Supply.
Democrats on Capitol Hill are questioning the power of Elon Musk, including his Doge team getting access to the Treasury Department's payment system. Musk also announcing a move to shut down USAID. Joining us right now is Senator Peter Welch, who's a Democratic senator from Vermont. And Senator Welch, want to thank you for being with us today. Look, there are some big and pretty active moves that are taking place. The Trump administration has moved forward with its plans pretty effectively and actively. What is the response from the Democratic side of the aisle?
Well, the Democratic side of the aisle to the authority of one person, Elon Musk, to go into the Treasury Department with five, in effect, teenagers almost, 19 to 24, giving them keys to the computer is total rejection. And hopefully Republican colleagues will have the same apprehension. I mean, first of all, they have no authority, no legal authority whatsoever. Number two, they are now have access to your social security number and mine, what we paid in taxes, all that private information. And they have no authority whatsoever to do this. So this is something I think that is a real threat to privacy. It should be primarily for Congress a threat to protecting the safety and the privacy of Americans. And of course, what is the ultimate outcome of this? So there's an enormous consternation on our side, but my hope is there'll be willingness on the part of my Republican colleagues to stand up against essentially a hijacking of the Article 1 separation of powers, checks and balances responsibility that Congress has.
I mean, I think it seems from the outside, at least, that the Democrats are still kind of licking their wounds from this last election, the results, trying to figure out how to put together a response. I will say it's been difficult for us at times to get Democrats to come on the program to talk about it. Yesterday, we were turned down by several senators to respond to any of these things. So it kind of seems as if you all are looking around trying to figure out what the response will be. Is that an accurate representation?
You know, there's some real truth in that, and here's why. What Trump is doing is lawless. He doesn't have the authority to do this. That limit of law that has always been something that presidents, Republican and Democrat, have always respected. You had with Trump that unilateral impoundment of money. That's a fundamental responsibility of Congress. It's illegal. It's been struck down by the courts. You have them stopping payments to USAID programs. That means that some of these food programs are stopped. It means that medicine that is on a dock is not being delivered to people who need it. Most presidents have a certain restraint. Trump doesn't, and it's lawless. And what can we do? We can complain about it. But at the end of the day, there has to be respect on the part of the presidency for the rule of law. And Trump takes delight in bashing that down. So damage gets done. Like on the USAID program, people were told not to go to work. And then portals that provide access to payment systems for like a community health center in Vermont, those have been closed. And they have like 0 to 5 days in order of cash flow. So even if the court then says that the president had no authority to do this, we've got people who are being laid off. So this is an extraordinary aggressive use of the power the executive has, even though, in my view, very strongly in judges, it's not legal the way it's being used. I mean, think about it.
But you are in a position because you don't have control in the Senate, you don't have control in the House. You're in a position to just sit back and say, we don't like this and we wish Republican senators would stand up and say something, or the issue will play out in the courts?
Well, the reality is that we do not have control. 53 Republicans in the Senate, 47 Democrats, and a 3-vote margin in the House. So there is that, quote, trifecta. You know, but what is going to happen and is starting to happen is if there's overreach on the part of the executive, then real people get hurt. Like these tariffs that were called off. We had a roundtable in Vermont, but that was going to hurt Vermont farmers. It was going to hurt Vermont maple sugar manufacturers for equipment. It was going to hurt our manufacturers in general. So people are going to start experiencing this, and I think that the danger for any administration, but it's particularly so with the Trump administration, is overreach. And then there's a pushback. And what people thought they were voting for, they find out, wait, that's not what I really meant. So I do think we have to push back. I mean, those 5 kids going into Treasury, it would be like giving 5 kids the opportunity to go into Citibank and get all your account information and then delegate to Elon Musk the decision is about whether you get your money back or the payments are made. So it's an astonishing delegation by the president to a person who's not elected and not accountable to Congress. And my view, that should be upsetting to Republicans as well as to Democrats. It's not what you call small government.
I get the sense that you have not heard back complaints from the Republicans, or are they complaining and not willing to say it publicly?
I would say the latter. I think the Republicans are always worried about Trump and how far he'll go, but they also know that right now Trump has a real grip on their base, and they're apprehensive about what are the political consequences if we speak out too much.
if this turns out to hurt people in your state, as you say, around the country, average Americans who potentially voted for Trump too, I mean, wouldn't it seem like that would solve itself if there's pushback on those levels to the administration? Is that your expectation?
You know, it's actually not. This is the real danger here. What the president is doing right now can destroy USAID. What he's doing in Treasury, he's driven out employees, including the top civil servant who is in charge of about $5 trillion in the payment system. So the process that the president is going through has the capacity essentially to really destroy, not just disrupt, many organizations. And that it may be, if we wait and don't stop what the president is doing, if he doesn't, I think, respect the proper limits of what his authority should be and have some appreciation of how this is going to have long-term damage, then we can really be set back.
Senator Welch, want to thank you for joining us this morning.
Thank you.
Coming up, the potential impact of tariffs on inflation. Now check futures this morning actually have firmed up just a bit here. The S&P 500 indicated higher by about 7 points. That's a modest pickup of yesterday's 0.75% decline. The Dow still showing a 50-point setback, and the NASDAQ now up 60 points. We'll be right back.
Insurance.
The Federal Reserve is closely monitoring President Trump's tariff policies, trying to figure out the potential impact on inflation. Steve is going to try and sum it up in one easy graphic. Good luck.
Becky, sometimes I scribble things out on napkins as people ought to stop me. Maybe they ought to stop me this time. But let me start off, tell you. Two Fed officials yesterday, Raphael Bostic from Atlanta, Susan Collins from Boston, saying that uncertainty over tariffs and fiscal policy, along with above-target inflation, supported the Fed's decision to pause. While Collins told CNBC yesterday she sees eventual rate cuts, she wouldn't commit to reductions this year. Part of the complication is just how complicated it is to figure out the inflationary effects of tariffs. So let's see if we can show that to you. If the Fed could count on the complete tariffs passing through to the consumer, it could figure out how much price would rise. There you go. Your 25% tariff direct pass-through becomes a 25% price increase. But then a whole bunch of other factors, take a look now, stand in the way, all of which matter a lot for investors and consumers. Okay, you have the foreign producer exporter could take a hit on their profits, as could the U.S. importer. Exchange rates in this case, a strong dollar, can offset some of the impact for the consumer in the U.S. Retailers could take a hit. That explains why we had Courtney here earlier today talking about consumer discretionary stocks have been under pressure amid this trade war. Okay, you with me so far?
Yes.
Yep.
Look at that. Okay, now, easy, right? The trouble is, once you figured all that out, you're not done yet. One other calculation you have to make. Let's go back to it now. You have to figure out the weighting of the specific products in the CPI index to know how the tariffs will raise or lower the inflation rate. You see that? So whatever is less than 25%, that's multiplied by the share. Whatever is at 25% multiplied by the share. And that is your overall inflation impact, which, by the way, I'm leaving something else out, which is substitution, doesn't count. But anyway, that'll tell you. You also have to know how long the tariffs are going to be around for, how long they're going to be there, how much they are, and on what product. Now, support.
Well, and does that account for how much gets eaten by the manufacturer?
Well, no, that's the whole. Guys, if you could put, can you go back to the chart
left
there?
end, the left end side is that.
Okay, so look at the bottom. The bottom is all those things that attenuate. The foreign producer profit
so
could take a hit.
Right.
The U.S. importer could take a hit. The exchange rate can attenuate it.
Yeah.
The retail profit can come down. So there's all kinds of investor implications in each one of those boxes, right?
Right.
Along with what happens to the consumer at the end of the process. Now, supporters of tariffs, Becky, have used these factors to argue that, hey, a 25% tariff is not a 25% boost to inflation, at least by as much as the tariff, and won't hurt consumers that much. Opponents look at the entire supply chain and the uncertainty, and they say it creates losses in unknowable places, subtracts value from companies that we can't figure out, and even with that, there's still the potential to pass some or all of the tariff along to the consumer.
And you know, there's even another layer there, which even if a lot of it did or some of it show up in the measured inflation readings, there's a case to be made. People say it's a one-time price adjustment. That is not ongoing organic inflation necessarily of the sort that the Fed, for example, would have to respond to.
This is all about figuring out the one-time effect on the price level. And then Treasury Secretary Scott Bessent has talked about this idea that there is some substitution.
Yeah.
If a price goes up here, it may go down over here, or people could substitute away.
Well, and it's also based on the idea that these would be permanent and not something that goes away in 3 weeks or something along those lines too, which would be even more complicated.
Exactly. But I think one of the interesting things about this is I know the market does not like uncertainty. It likes to know where the potholes are, where the costs are coming from. And when you look at that chart, it's really hard to figure out. And I think the Fed is kind of in the same bucket of, tell me the answers to all the questions in that chart, and I'll tell you what my policy is.
Right. This is like when somebody asks you, how much money do you need in retirement? Well, tell me how long I'm going to live.
Right.
And I can back it up from there.
So Becky, what's the rating of the chart, would you say, on a scale of... I've had some really good ones that you've liked. Uh-oh.
I get it. I think it breaks it down to a input, but I still think it's an unknowable answer because I think there are other factors that.
It also brings up the question: if you have this diffuse impact, what's the point? Because honestly, a price adjustment that changes behavior is what this is supposed to be about.
Right. This is like too complex.
That's a really important point. If you end up having all of these things that end up mitigating the tariff,
it all gets washed out. What are we left with?
Then maybe there's no point
the
to
U.S.
the
government
tariff.
would be left with revenue that would
You can't have it both ways, is what Mike Santori is saying. Okay, well, anyway, thanks, guys, for bearing with me.
Thank you, Steve. When we come back, we're going to talk big pharma companies and their ties to China. Merck and Pfizer both reporting earlier this morning. We'll run through the numbers and talk tariff impact on that sector. And then ARK Invest CEO Kathy Wood will join us. Squawk Box will be right back.
Supply.
Welcome back. Merck and Pfizer reported earlier this morning shares of Merck taking a leg lower, earnings and revenues beating estimates, but guidance coming in well below expectations. Pfizer topping earnings and revenue expectations and affirming its outlook for the full year. Meanwhile, President Trump's 10% tariff and retaliation by China raising questions about the future of the pharma sector. China is a major supplier of pharma ingredients and manufacturing plants. Joining us now, Jared Holds, Mizuho Securities America healthcare sector strategist. Jared, a tale of two pharma companies this morning. I guess let's start with the one that took a leg down, which was 5% when you wrote your note, then it was 8%, and where is it now? 7.5%. Is that a warranted decline based upon what you heard this morning, Jared?
Hey, Steve, thanks a lot for having me. I think so. I mean, this Merck situation is fairly murky at best when you consider their biggest drug is going off patent in 2028. This Gardasil issue, which doesn't seem to be under control, and management had kind of alluded to the fact they thought it was getting cleaned up, but it seems like that's not the case, at least near term. So I think this is just another pharma company that's going to go through some near-term challenges, and I think the street is going to, again, come to the conclusion that potentially more M&A is needed to kind of stem the losses here.
M&A which way? They buy or get bought?
They buy. Just pipeline needs, asset needs as we go through the rest of this decade. Over the next 5 or so years, they're going to have to probably continue to buy assets. They've been fairly acquisitive over the last couple of years. They just did a deal in China, actually, in the obesity space, but just given some of this revenue degradation, they're probably going to have to do more.
Jared, for people that aren't pharma bros like myself and don't know, what is that drug that comes off patent in 2028?
That's Keytruda. That's their biggest revenue contributor by far. This is a massive blockbuster cancer drug that goes away in 2028. They are working on some reformulations. They mentioned that this morning. Just not sure it's going to be enough because this is over 50% of revenue.
All right, now let's put a smile on our faces and talk about Pfizer, which went the other way. Why the big difference between the two companies? Is it endemic to the companies, or is there something else going on?
Not really sure there's that much different, actually. I think Pfizer, we knew the numbers they had guided towards the latter part of last year, so they kind of, de-risked the numbers, de-risked the quarter for us to some extent. Stock's basically been flat for as long as I can remember. I don't think the quarter here, the numbers today, really portend in a significant way up or down as far as the near-term dynamics. They're still going through some situations that stem from COVID. There's still some contribution in the numbers from vaccines and other COVID treatments. I think the street will probably wash those out. I think this is another situation in which they have to prove to investors that the pipeline is significant, that they can cut costs if revenues decline. But over the next couple of years, it's probably okay. We're looking more into the out years where there's risk here.
So Jared, that's fascinating. So you're really saying to me that the different reaction this morning is all a matter of guidance leading up to the earnings reports and how they steered the market. So one did a good job of telling us what happened, one did a poor job, and each one pays a different price on that day.
I think so, yeah. I mean, I think that what you're seeing in Merck is essentially a reflection of downside surprise related to Gardasil in particular. This has been one leg of the story that's been under scrutiny for a couple of quarters, and there's been some expectation.
I'm just going to cut you off before we lose time, Jared. I'm sorry, but give us something good that's going on that you're excited about in this sector.
Well, I think what could be good is just to get a little bit of clarity on what is actually happening in Washington. We'll get more this week with RFK potentially getting in there, some other big hires on the FDA side, et cetera. So once I think we get the Washington situation cleared up, that could pave the way for more clarity here.
Are there any particular companies that when you get up in the morning, you really want to know what they're doing that you're excited about?
Well, I think Lilly, they're going to report later this week. That's been the best name in pharma by far. We're going to see what they have to say about their obesity pipeline through the year. That would be the one.
Jared, thanks so much for joining us this morning. Interesting story and great take on why the difference between the two companies this morning.
You bet. Thanks.
It is just after 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Mike Santoli and Steve Leisman. Joe and Andrew are off today. Among our top stories, China launching an investigation into Google. The country's State Administration for Market Regulation saying that the U.S. tech giant is suspected of violating China's anti-monopoly law. That announcement coming alongside Chinese retaliatory tariffs on U.S. goods that were sparked by President Trump's new 10% levy. Of course, Google, the search engine, hasn't operated in China since, I think, 2010. Separately, China's Commerce Ministry saying it can pull Calvin Klein parent company PVH and biotech firm Illumina on its unreliable entity list. The ministry said that the companies took, in its words, discriminatory measures against Chinese enterprises. Companies on the blacklist can be subject to fines and/or other sanctions, but again, these are being kind of described as low-level retaliation, not major moves that the Chinese could make if they were really trying to make a point. By the way, one earnings mover for you this morning to keep an eye on. PepsiCo reporting mixed fourth quarter results. Shares are down on that news by about 2.1%. PepsiCo says that it sees core earnings share for growth this year in the mid-single digits. The street was looking for 4.6% growth on that metric.
All right, take a look at the futures this morning, kind of hovering not too far from the flat line. You see a little bit of a boost in the NASDAQ, a big positive surprise by Palantir might be helping that out. The Dow is indicated lower by about 79 points. Treasuries Actually, their yields lifted throughout the day yesterday after an initial decline on the tariff news. You see here the 10-year at 4.59 has not gone below that 4.50 level, and the 2-year note is back above 4.25. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
All right, so Mike, Becky, Steve, let's start with that earnings story on Palantir driving up some of that tech sentiment. Those shares right now up about 22% after posting earnings and profits that beat estimates in the fourth quarter. The company, though, also offered strong guidance with current quarter and full year sales forecasts coming in well above expectations. The software company projecting sales to grow at least 54% this year. Now, in the earnings release, CEO Alex Karp said that the results demonstrate the company's deepening position at the center of the AI revolution, so that AI upside is driving a surge in Palantir shares. Also on the tech side, media side, Spotify shares making gains before the opening bell, shares right up around 8.5%. The streaming audio giant posted a Q4 revenue number that beat expectations and reported its first full year profit in its history. Total monthly active users also increased to 675 million. The company said it expects to add another 3 million in the first quarter. That number coming in above estimates, so a lot of that driving the positivity on Spotify. And let's end internationally on spirits, because it's 5 o'clock somewhere. Diageo is down right around 1% after reporting some of its results. The losses are coming after falling to its lowest level since March of 2020 over the last couple of weeks here. The spirits maker withdrew its medium-term guidance due to macroeconomic and geopolitical uncertainty. The company's CEO also said the prospects of tariffs could hamper its ability to recover falling sales in Diageo's earnings. The company's CFO said that U.S. tariffs could result in a $200 million hit in the firm's second half operating profit. And then analysts at Jefferies estimate that almost half of the company's U.S. sales are actually derived from imports from Mexico and Canada. That includes tequila brands like Don Julio and Casamigos as well. So Becky, Diageo, a big focus here, down 1%. I'll send things back over to you guys.
Yeah, not nearly down by as much as it had been before. So 1% not looking bad relative to what we'd seen, I suppose.
No, and some of the tariff rhetoric and walk back and negotiation probably plays into that as well.
Yeah, I think so. Don, thank you. When we come back, 3 big interviews you don't want to miss with ARK Invest CEO and Tesla bull Cathie Wood, Republican Senator Tim Scott on this week's debanking hearings in Washington, and former Canadian Finance Minister Chrystia Freeland on President Trump's tariff threats and what she sees as the response. Stay tuned. Much more Squawk Box right after this break.
You got this.
ARK Invest is out with its big ideas of 2025. There are 11, all related to technology. Joining us now with more on her 2025 strategy and how tech could perhaps get caught in the crossfire of President Trump's trade moves, Kathy Wood, CEO and CIO of ARK Invest. Welcome, Kathy. Good to see you. I guess I would start by saying, for one thing, you know, the market has seemed pretty captivated by a lot of these disruptive technology themes, whether it's the AI infrastructure build out. Obviously, crypto has had an incredible run. Now, Tesla naturally had been on a roll in terms of excitement about autonomy and robotics. So what do you feel is left? What are the ripe ideas that you would like to be positioning for at this point?
Well, I think that the AI movement has just begun, and you know, we've been moving away from more hardware-centric tech, infrastructure and so forth, towards software. Palantir is a very expensive stock, but there's nothing like it in the software space. It is, we believe, going to dominate the biggest part of the tech stack when it comes to AI, and that's the platform as a service part of the stack. So very excited. And again, if you think about the AI revolution, we are today where we were when it came to the internet in the early to mid 90s. So again, we've just begun, and so we have miles to go. And then of course the applications, Tesla, not only do we have robo-taxis, but now humanoid robots. And so to give you a sense of slowly, then all at once, we certainly think with Tesla, robo-taxi is this year. I know that Elon's been saying that it was going to be just around the corner for the past 6 or 7 years. And we thought it would be sooner, but it is here. That is a huge opportunity. What's happening faster than we expected is the humanoid robot opportunity. Tesla in the public markets, certainly Figure AI, Aptronic in the private markets. We own those in our venture fund. So lots of excitement around AI.
Yeah, I mean, you mentioned, of course, that you thought that the autonomous implementation for Tesla might have happened by now. I mean, obviously, there have been these optimistic projections. I was looking back in 5 years ago, on your website, you thought that 2024 Tesla's car sales would be 3.2 million as your bear case, and they were 1.8 million. So obviously, it's hard to project 5 years forward. Why is the world ready to pay up for many robots, actually?
So that time period is very important, Mike. Did we know about COVID? Our forecasts hinge importantly on unit growth, and everything stopped during COVID.
Yeah.
I think in terms of our forecast on EVs, we were much closer to the mark than most other analysts out there, certainly in terms of surprises relative to expectations, which drove the stock importantly. One other thing, just in terms of big ideas, I think the most underappreciated application of AI is healthcare. I think healthcare is responsible for an incredible amount of storage out there right now. Data is the name of the game, and healthcare, we've got 37 trillion cells in our body, and they're going to be sequenced as we're looking for cures. And so while robo-taxis might be the biggest application short-term, $10 trillion in the whole ecosystem over the next 5 to 10 years, we think the most profound application is in healthcare, and that it will lead to curing disease. It already is.
The market seems to, whenever it does kind of get enraptured with these big themes, want to have kind of a bellwether clear play, whether that was certainly Tesla in EVs, NVIDIA in the AI infrastructure build-out. Is there something comparable in the medical applications of AI?
Well, I think you have to look at the sequencing technologies. That's where it's starting. So the Illuminas, the PacBios. But in terms of research in AI, there are a couple of names. Recursion Pharmaceuticals has just in 1 year, thanks to AI and I think 1,500 GPUs, so very few relative to what we're seeing elsewhere, has driven the average number of hypotheses per researcher for new drugs up tenfold in just 1 year, from 20 to 200 per researchers. So we think that research and discovery is going to be impacted incredibly. And we also think that phase 1 and phase 2 drugs, which get very little love in the marketplace these days, especially phase 1 and anything preclinical, that now that AI is speeding everything up, we're going to see more value placed on those because the number of failures is going to drop and the time to market is going to accelerate. And we think cures are going to increase the value of patents, and this is not what the traditional world thinks, by anywhere from 2 to 20-fold. Because if we're curing disease, then we won't be falling off patent cliffs. And I do see Illumina getting hit today by the China announcement overnight. Illumina is the premier short read sequencing company, and that's going to be very important in the blood tests that help us discern whether we have cancer or whether it is recurring.
Any sense of why Illumina was one of the very few companies that China decided to target?
You know, I know that the sequencing technology in China has improved quite a bit. I know they don't want to disadvantage themselves, and they want the leading edge tech. So they may feel that BGI and some of their other companies are up to speed. We do think under new management, Illumina is accelerating the pace of change, finally, again, including driving costs down. Big mistake it made, and giving China a way to catch up was just holding prices at $1,000 per genome. Now we're down to roughly $200 per genome, and we think that's ultimately going down to $1 per genome.
Kathy, when you take a position like you have with Tesla, how much is that based upon the idea that you have a guy like Elon Musk at the head of all that stuff?
Well, we have a 6-point scoring system, and the first score is management. Management, right. People, and culture need a visionary management, especially when it comes to innovation these days, because these companies need to invest aggressively, as Tesla did in 18, 19, 20, in order to capitalize on massive opportunities. And in fact, with AI, it's winner take most right. opportunities. So they need to stand up to more traditional investors who want their dividends, their profits, their share repurchases now. So you'll not find many of those stocks in our portfolio. You'll find stocks like Tesla.
So does it bother you that the head of Tesla seems to be spending most of his time kind of involved with the federal government? Is that a knock on your sense of the outlook for Tesla? Or do you expect Elon Musk to come back full time to running his companies?
Yeah, so as I said, the first score is management, and we look carefully at what management is doing, how management is spending its time, and how a visionary leader like Elon Musk is surrounding itself by brilliant people who want to solve very hard problems. If you had listened to Tesla's last conference call last week, you would see how focused Elon is on any pain points or bottlenecks. So he's highly focused on getting this autonomous taxi network up and running this year, clearly. He's maniacally focused, it seems to me, more than I understood before listening, on humanoid robots. We've, in our big ideas, you'll see a section on humanoid robots, and we think that humanoid robots are going to benefit small companies more than large companies, which is a big change. But as far as Elon spending time making the government more efficient, I'm actually thrilled. And there's something that people do not understand about Elon. Elon understands that we are in the midst of a massive convergence among technologies, and that AI is the biggest catalyst among the 5 major innovation platforms evolving now. So robotics, energy storage, AI, blockchain technology, and multi-omic sequencing. He understands those convergences. He's involved in 3 of them. And data is the name of the game. If you look at all of his companies, they're all spewing out different kinds of data. That's proprietary. And that's the name of the game in terms of winning all kinds of AI races out there. And of course, the government is filled with data itself. I don't think that's why he's there. He's there to make it more efficient, and we're thrilled.
Yeah, well, of course, we already have discussed whether, in fact, it's correct that he has direct access to some of this data. That's going to be, I guess, sorted out in a separate venue. Just quickly, though, Kathy, when you mentioned blockchain, it seems as if the latest run and wave of excitement over crypto has mostly been about owning it as an asset, and that the Trump administration is going to be more friendly in terms of allowing more products and essentially not trying to prevent people from selling it or getting involved. It's not as much about what's going to be done with the technology or creating some kind of a platform. Is that right?
I don't think so, actually. There is stablecoin legislation going through, or we think it will go through, led by Senators Lummis and Gillibrand. And I think this administration is very supportive of that legislation, including stablecoins. What's interesting about stablecoins, if you look at the transaction value on the various blockchains out there, the stable coins now account, the transaction value is higher than either for Visa and MasterCard. I think many people are very surprised. Now, I want to clarify the value. The count, the number of transactions is much greater on Visa and MasterCard. But the high volume transactions are taking place on these other networks. So DeFi, and we're going to stop calling decentralized finance DeFi, probably. It sounds a little defiant. It's nothing but the internet financial system. It's the layer of the internet now finally built to accommodate financial services and commerce. So I think it's already the innovation is burgeoning out there, and it's interesting to make this more familiar to people and to help them understand what this is. I heard from someone in India that they're calling it the Finternet there. Again, this is the internet, the next generation internet. So pretty excited about it.
Hey, Kathy, part of the reason that you all have done so well since the election is your big ownership in things like Bitcoin and Tesla that obviously have taken off since President Trump was elected. Elon Musk is such a unique and amazing individual. From all the companies that he's been able to create, from what he sees, kind of the focus that he has, his ability to multitask with incredible focus. He's also been incredibly good at walking a fine line with multiple administrations, whether that be in the United States and in China. It's a pretty rare talent that maybe Tim Cook is the only other person I can think of who's walked such a fine line and done it so artfully. These Chinese retaliation that we've seen this morning, obviously small companies, not things that are really going to have a big impact, companies that don't do a whole lot of business in China to begin with. If they were to get more serious, if things were to really ratchet up between the Trump administration and China, and China chose to retaliate by going after an Apple or a Tesla, would that shock you? And what would you do to either protect yourself ahead of time or as a result if that were the case?
I think China right now is very focused on a phrase called new productive forces. And that's all about innovation. Because they're trying to pivot from a very big problem they have, which is in the property sector. So I don't think that Xi Jinping will want to derail the momentum on innovation. And it's very interesting. I think we're surprised that when it comes to robo-taxis, that China has been more forthcoming with Tesla than we expected. In our model for Tesla, we did not expect much share of the robo-taxi market going to Tesla. But I think what's going on, while Baidu's Apollo is making progress and and so forth. It's still rather geofenced. China wants to learn from Tesla and from Western companies altogether in all kinds of technologies how to go about and break through into this new age with, in this case, robo-taxis. So I'd be very surprised. And you know, Elon also has another secret weapon in China. His mother, May Musk, she is beloved in China, which is another big asset.
Interesting. Kathy, appreciate you running through it with us. Thank you very much.
Pleasure. Thank you, Mike. Hey, Steve.
Coming up, where Apple fits into President Trump's tariff threats. Plus, we'll speak to the former Canadian finance minister, a current candidate to be prime minister, on this week's tariff drama. Stay tuned. You are watching Squawk Box on CNBC.
Restrictions apply.
Apple coming off more than a 3% drop to start the week. For now, the company is keeping quiet on tariffs, but they could have a significant impact on Apple's businesses. For more on this, we want to bring in our own Steve Kovac. And Steve, good morning.
Good morning. Yeah, this is an interesting one here because Apple has a few options how to get around these tariffs. Of course, they can always fight for exemptions, but let me break down what they're facing right now that these tariffs have gone into effect. They could, of course, raise prices for their products here in the United States, or they could absorb those costs. Another thing that folks are talking about the last couple of days, is diverting their manufacturing as much as they can, either in India or Vietnam, to import those products from those countries instead. But look, none of that is going to be enough to mitigate the entire effect tariffs would have. I was emailing a bit back and forth the last few days with Eric Woodring over at Morgan Stanley. He's one of the axes on Apple. He predicts about a 3% hit to earnings if these tariffs do go into a full effect. And then Gene Munster, our friend over at Deepwater Management, he also noted on the manufacturing front, about half of Apple's sales are manufactured in China. That includes 85% of all iPhones. India, we talked about that so much during the pandemic, with Apple diverting some manufacturing over there to diversify their supply chain. Just 10%, according to Gene, of revenue is built in India, though. So Apple could still, of course, fight for exemptions, maybe offer Trump something like an investment in the United States, like they did last time. Trump, in fact, teased that Apple would be announcing a major investment in the United States soon, but Apple has not commented on that. And then, of course, we come to that inauguration moment a couple of weeks ago. That apparently wasn't enough. Tim Cook himself personally donated $1 million to the inauguration and sat behind the president during his swearing in, along with those other tech executives. The idea there, this kind of cozying up to Trump with Cook and his peers and the big technology companies, would kind of ease Trump's attitude towards them. But so far, that doesn't appear to be happening. There doesn't appear to be any exceptions to these guys. And to your point earlier, Becky, you're talking to Kathy Wood about what can Apple do to retaliate. Tesla's a good target. Yeah. Apple's another great target too. Apple's still trying to launch Apple Intelligence in that country. They need that to grow their iPhone sales. The sales in China were down 11% in the December quarter. They need some more strength in China, and they're not getting any help right now.
I mean, I guess for China, it's a double-edged sword too, because there are so many manufacturing jobs in China that are reliant on Apple. They're not going to want to cut off their nose to spite their face.
Exactly. There is a symbiotic relationship there, but and especially during the holiday season, they literally train in thousands and thousands of workers to these Foxconn factories, and they have these somewhat temporary jobs. So yes, it is huge for employment. We know China's been struggling. There's also stimulus coming too. So that is also driving some sales for Chinese branded smartphones. There's this competition and kind of a nationalist effect that we've been seeing over the last couple of years, with Huawei coming out with phones, taking away share from Apple. So
I get the sense that this is still a negotiation with these tariffs.
Exactly.
So it's hard to draw any hard conclusions.
Nothing's happening until it happens, of course.
And that there won't be exemptions, or that there won't be carve-outs.
But if this does happen, let's say there aren't any carve-outs, let's say it continues full-throated.
It's like jumping straight to the worst case scenario.
You're jumping straight to the worst case scenario. Analysts are predicting 3 to 4% hit. Again, can Cook convince Trump to give him some kind of exemption like he did last time? And how that happens. I was with Tim Cook last week in Cupertino talking to him about these earnings reports, and of course, one of my first questions was, has the president indicated to you in any way you're going to get exemptions? And he would not take the bait on that one. He said, we're just monitoring the situation.
Well, he's a smart man.
He's a very smart man. He did it really well in the first term, and I think he's doing it again now.
Steve, thank you.
Thanks, guys.
Okay, coming up, South Carolina GOP Senator Tim Scott joins us on today's debanking hearing in Washington. The idea for this was sparked when President Trump called out Bank of America's CEO at the World Economic Forum. Remember that? Stay tuned. Squawk Box will be right back.
off. Terms apply.
Welcome back, everybody. President Trump called out Bank of America CEO Brian Moynihan and JP Morgan CEO Jamie Dimon at the World Economic Forum last month, saying conservatives complain banks are not allowing them to do businesses. Both those companies have denied that they make banking decisions based on politics. But following that exchange, the Senate Banking Committee called for a hearing on so-called debanking. That's going to be taking place tomorrow. And joining us right now to talk about it is Senate Banking Committee Chairman Senator Tim Scott. Senator, first of all, thank you for being here. Second of all, why don't you explain why you're holding these hearings?
Well, I actually announced this part of my agenda in late December, that there was a need for us to take a look at the debanking strategies that was used by the Biden administration. Think about it. This is Black History Month. I grew up in the Deep South. I understand the unbanked Americans are so often minorities because there was redlining back when I was growing up. The good news is today it's less about black and white, but unfortunately, today it's more about red and blue. The politicalization, the weaponization of our banking system should never happen. If you are politically disfavored under the Biden administration, we saw cryptocurrency targeted, other digital assets targeted, the oil and gas targeted, the firearms industries targeted, and individuals from Melania Trump and beyond. So I've gotten over 1,000 calls from people around the country who say they have experienced some debanking. So tomorrow we'll have an opportunity to hear from Old Glory Bank and what they went through and why they existed to try to find a way to provide resources, financial resources, to those who've been debanked. We'll hear from Anchorage Digital so that they will talk about the process that they experienced under the OCC, and experts who can speak clearly about the importance of treating all Americans exactly the same, no matter whether you're Democrat or Republican, whether you're liberal or whether you're conservative.
Senator, I hear a little bit of conflicting points of blame in what you just said. At the beginning, you said it was the Biden administration and the regulators who were doing this. At the end, it sounded more like, well, maybe the banks are choosing politics on some of these issues. Let me read you back a response from Jamie Dimon, who put this pretty succinctly. He said, "We are responsible in the law to fight sex trafficking, money laundering, tax avoidance, and basically regulators too," he said. He said, "The regulators put a lot of pressure on us and tell us what is high risk. If we don't debank someone and something goes wrong, it could be hundreds of millions of dollars in fines." So a lot of banks are kind of guessing like, we should get rid of these people? We're not allowed to tell you why we debanked you. So they will point back and say that it is the regulators who are putting pressure on them and who have pretty vague laws, and that they are not, therefore, as part of those laws, allowed to tell people why they're debanked.
Well, Maggie, there's no doubt I spoke to the Bank Policy Institute a few weeks ago, and one of the things that they said collectively was that the OCC under Biden administration put so much pressure on them that their reputational risk wasn't in the competitive market. It's really with the regulators. Think about that. The weaponization of our regulatory state against our financial institutions. At the same time, about 18 months ago, I spoke before a lot of the large GSIBs as well, and they talked about their decision to not bank certain industries because of the environmental impact. So having a conversation about the importance, if it's legal in America and you do not have a business reason to not bank someone, then you have a responsibility to do so. Next week, I hope to have a larger, broader conversation with more CEOs about this really important topic.
Senator, do you feel like you have the expertise, or the Senate has the expertise, to supplant the expertise of bank supervisors when it comes to the issue of the extent to which some of these banks should or should not be involved and have crypto on their books? There was as I understand it, a consent order between Anchorage Digital Bank and the OCC that seemed to deal with this through supervisory. Is that discrimination or is that prudence?
Well, the question you asked should be answered simply. Do we have the responsibility of oversight? The answer is emphatically yes. Are we thankful that the Biden administration is gone and the Trump administration is here? 1,000%. Am I excited about Scott Bassett and the team he's going to assemble? over our financial regulators. 100% we are heading in the right direction. So will I have more information to do a better job of oversight? Absolutely. Have I had really important conversations with financial institutions about the weaponization of our banking system against their customers? The answer is yes. Will I have more information at the end of tomorrow? 1,000%.
Yeah. Senator, in the meantime, let me ask you about this new proposal that was brought up yesterday, the idea of creating a sovereign wealth fund. Scott Bessent, Treasury Secretary, I guess going to be in charge of that, and really looking at, I think as he put it, you know, taking some of the assets that we have and monetizing them. What do you think about that prospect?
Well, I've talked to a number of people yesterday about the important decision of a sovereign wealth fund. I think it's a great idea. I think the important part from my perspective is governance. How do we construct the kind of board, the governing board, that makes sure that this is not weaponized during this administration or the next administration, but what we focus on is ROI. That means that you have to have a team of experts doing what we see at the PIF. We see really good examples in Norway, Saudi Arabia, Dubai that have done a really good job with these sovereign wealth funds. The question is, will we have the type of governance over it so that no matter who's in office, whether it's Trump or someone else, that the focus is ROI and not specifically someone's political agenda?
Senator, you mentioned 3 countries that have massive surpluses based on their resources, and they're trying to use the sovereign wealth fund to diversify that because they have essentially too much money coming in to kind of put to work within their own country or in other ways. That doesn't seem to apply here. Isn't the big question, where's the money come from? Are we going to fund this, out of the annual budget? What are we actually? What's going to be in the fund?
Well, that's a good question. I think the president will have an opportunity to answer that question. But if you think about the decisions he's making and the signals he's sent, whether it's TikTok or the Panama Canal renamed the American Canal, what we do know is that having an opportunity to have that serious conversation about investing in America's future is a really good opportunity. What we do know is President Trump as a visionary leader, and he's going to bring to the table things that we haven't considered before that can produce a better ROI for the American people. And so how we figure out how to do it, the good news is we have the world's best in our nation, and we will have, if we go forward with it, I think a very competitive position.
And Senator, just real quickly, you don't worry about the U.S. government having large stakes in private corporations?
Well, once again, we have to allow the governors of this entity to be a serious part of the conversation, and how they invest, where they invest, is incredibly important. What we know today is that we have trillions of dollars being invested through our 401ks that flow through the government. So there is a way for us to have a conversation. I think it's necessary. We'll see what turns out over the next several months. This may take a little longer than that for this to happen. But the good news is President Trump he made promises on the campaign trail. He's keeping those promises, and it allows us to take a look at where America is in every facet of our economic lives. And hopefully we'll be back to have another conversation about why did this go so well, or what were we thinking? So I'm happy to come back and have that conversation over the next several months.
Senator Scott, we always appreciate your time. Thank you for joining us today.
Thank you, Becky. You have a great day.
All right.
Bye-bye.
You too.
Coming up, the U.S.-Canada trade relationship under the microscope. We'll speak with former Canadian Finance Minister Chrystia Freeland on President Trump's tariff threats and pullback yesterday. Stay tuned. You're watching Squawk Box on CNBC. President Trump pausing tariff threats against Canada and Mexico hours before the levies were supposed to take effect. On X, Canadian Prime Minister Justin Trudeau wrote that his country will reinforce its border with the U.S. He said Canada will appoint a fentanyl czar, list drug cartels as terrorists, and launch a joint U.S.-Canada team to combat organized crime. Joining us now, former Canadian Finance Minister Chrystia Freeland. She's running to be Canada's next Prime Minister. Thanks for joining us, Chrystia.
Great to be with you, Steve.
So, can you help us understand what happened? I've got two stories in front of me today. One is that the Canadians and the Mexicans gave in to President Trump's demands. And then there's a story in the Journal today that says President Trump didn't really get very much. From your perspective, what actually was given by each side?
Well, from my perspective, Steve, what happened is common sense prevailed. You know, the Wall Street Journal was absolutely right in saying this is the dumbest trade war in history. And markets sent a very strong message yesterday. They said this will be bad for the American economy. And we heard the same thing really basically from everyone who has anything to do with the US economy, right? We heard it from the chamber, we heard it from manufacturers, we heard it from the aluminum sector, we heard it from the farmers, we heard it from blue-collar workers, we heard it from the steel workers. Everyone said, this is a really bad idea because our trading relationship with Canada is mutually beneficial. And then I think you guys got the message that Canada would retaliate. And that is very important to be clear about. You know, our country is more united around this than we have been in living memory. We want a great relationship with you guys. We think we have a great relationship with you guys. But if you hit us, we will definitely hit back, and that will make a really dumb idea even dumber. So I think at the end of the day, what happened was American capitalism worked. The US stock market sent a powerful message. I'm grateful to American capitalists for being smart, for sending that message,
right.
And I'm glad that message was heard. But the threat is still there, it still lingers,
right.
And that's a really bad thing for Americans and Canadians.
Our understanding was that you were disappointed in Prime Minister Trudeau's placating President Trump. Are you disappointed in his response yesterday and what he appears to have given President Trump?
Not at all. Our whole country right now, every single person is absolutely united. We are totally supporting the Prime Minister in the great work he is doing and the great outcome that we had yesterday. And what we really need now is to get to a place where the tariffs are definitively off the table, because as long as that threat is hanging there, it's bad for everyone. It's bad for the US economy, it's bad for US workers, it's bad for US businesses, it's bad for the car sector. So I think what we all really need to focus on is we need to say a good result yesterday, and now let's move this totally off the table and get back to an effective, mutually beneficial relationship. You know, Ronald Reagan said about the Canada-US relationship that it was the most productive relationship between any two countries in history in the world. He was right.
Krista, we've had a lot of, our president has discussed a lot this issue of the U.S.-Canadian trade deficit, which we had a discussion this morning, one gentleman talking about the goods deficit. I threw in the trade and the services, trade and goods and services together at about 40 billion in 2023, plus or minus something this year. How significant is that in your mind in context of the whole relationship of $40 billion trade deficit? Do you agree with President Trump that Canada's been unfair to the United States?
No, absolutely not, Steve. Look, the reality is our trading relationship is balanced and mutually beneficial. And if you exclude energy, if you exclude oil and gas, electricity from that trade, then it is basically balanced. In fact, some years you guys run a surplus with us. Now, I think you are really lucky that Canada is the country that sells you oil and gas and electricity. We are a much more reliable supplier than, say, Venezuela. And the fact is, particularly with AI, America's needs for energy are only going to increase. So I think you should be saying to us, hey, Canadian friends, thanks a lot for being such a great partner. Thank you for being a reliable democracy, a NATO and NORAD ally that is going to help us have the energy that we need to dominate in the AI space. And I will also say, Steve, that, you know, there is a danger here for the US, and that is, Canadians are really angry. This has been a weekend where basketball games, hockey games, the US anthem has actually been booed. I do not remember that in my lifetime. We feel hurt, we feel betrayed. We will retaliate if we have to, but you know, we want to be your friends. We know that this relationship works, and you know, you should be glad that you have us as a reliable energy supplier. As finance minister, I got a pipeline built to the West Coast for oil. We do have alternatives. We prefer to be your ally and partner, and for that to be the foundation of North American economic and national security. But you're making it hard for us by threatening to punch us in the face.
Yeah, well, that's exactly, Christian, where I wanted to go there. You mentioned how united and unhappy Canadians are about this. Now, with the Trump administration's relatively hardline trade stance, globally, there's been a lot of talk of, you know, European allies are thinking about trying to, you know, disengage a little bit or find alternative trade relationships. Same thing with China, Mexico. Is that, and you said Canada has options, is that really something that seems like, you know, this is a signature moment where Canada will look to become a little bit less integrated economically with the U.S., or is that even possible?
Well, look, Steve, I really want to emphasize I'm an optimist. I believe a win-win outcome is possible. And I'm not like a crazy Pollyanna here, because I was foreign minister responsible for the Canada-US relationship during the first Trump administration. And you will remember there was a lot of rhetoric, there was a lot of noise, there was a lot of shouting, not nice things were said. But at the end of the day, we got to a great place. We got to a new trade agreement, the USMCA. President Trump said it was the best trade deal ever, and Nancy Pelosi and the Democrats backed it too. So I really want to emphasize for everyone, the fundamentals between our two countries are very strong, are mutually beneficial, and I think we can get to that. But I would say to Americans, don't take Canada for granted. You are lucky to have us as your neighbor. You're lucky to have us as your energy supplier. The fact that we are your NATO and NORAD ally and are a safe and prosperous country all along your vast northern border is foundational for America's success in the world. So please remember that. Don't punch us in the face, and we can have a good deal.
Krista, I have 30 seconds. What happens 30 days from now? Tariffs or no tariffs?
We are going to be fighting very, very hard for a no tariff outcome. And Steve, I hope you and U.S. business leaders will fight for that too, because it makes sense for both countries.
Krista Freeland, thanks for joining us this morning.
Great to be with you.
When we come back, we will get you set for another big day in the markets. The futures this morning, at least at this point, are a bit of a mixed picture. The Dow futures are still off by close to 90 points. S&P futures have turned positive, up by just over a point. The NASDAQ indicated up by 27. Stay tuned. You're watching Squawk Box, and this is CNBC.
Off terms apply.
All right, let's take one more look at the markets. S&P is at the flat line. NASDAQ indicated up by about 23 points. The Dow futures indicated down by about 90 points. Of course, this is a bit of, come back to reality after yesterday's
A little bit,
moves.
yeah. We're still in apprehensive wait-and-see mode. I think Merck's decline is probably having a bit of influence on the Dow, and then, of course, Palantir's a boost for software within the NASDAQ.
Let's take a very quick look at treasuries. You'll see right now that the 10-year is sitting at 4.58, the 2-year's at 4.26, and then oil prices have come back down significantly yesterday after concerns yesterday if there were to be tariffs that were placed, especially on Canada. Right now, WTI is down by about 2.7%. 71.19 is the last tick.
Maybe Christopher Freeland's right and common sense will prevail. Whatever that is.
I think it has to this point. I think we are. Steve Leisman and Mike Santori,
right.
Thank you guys both for being here. We'll see you right back here tomorrow. Right now it's time for Squawk on the Street.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are mixed. Yields up as China retaliates a little with tariffs on American oil, coal, nat gas, some ag equipment. Earnings get more attention today with some lower guidance at firms like Merck and Pepsi. Our roadmap begins with the trade tit for tat. China does hit back with tariffs on the U.S., including targeting energy and Google.
Plus, we're keeping an eye on shares of Palantir. Why? Well, they are surging after the company posted a strong outlook on what it calls untamed AI demand. Its CEO expecting a company windfall from Elon Musk's government cost-cutting efforts. And there are also any number of other corporate earnings that we'll try and get to this morning and focus on Pepsi, Merck, Pfizer, PayPal. Spotify shares up about 8%. Those were all amongst the names that have reported this morning. Alphabet, by the way, after the bell.
Let's begin with China, though. Retaliating against the president's tariffs, Beijing says beginning February 10, it will impose additional tariffs on some imported U.S. goods, 15% on coal and liquefied nat gas, 10% on crude oil, farm equipment, pickup trucks, and some other vehicles. Other actions include tightening export controls on critical minerals used in things like smartphones. China also announcing an antitrust probe into Google, Jim. They're adding PVH and Illumina to this unreliable entities list.
I thought these were funny. PVH, what are they, buttons on the shirt wrong? Illumina, there's two other companies that do what they do. Coal, very much in demand in Western Europe. Liquefied natural gas, demand everywhere. Minerals, okay, they've already had pretty tight controls. So I look at this and I say, all right, what they're saying is, we don't want to go to war. So what we're going to do is demonstrate that we're going after some things that we know they're not important to you. We know that doesn't hurt any aspect, but we can't lose face here. We got to do something. Liquefied natural gas is the funniest one because the demand for liquefied natural gas is insane. So you have I mean, natural gas isn't even up. So you have a statement which basically says, Mr. President, we heard you. Maybe we ought to sit down and talk. Now there are some people would say appeasers. I don't want to use that strong term. There are people within the government who very much want to deal. I think that the president very much wants to deal. They can certainly raise from 10 to 25, but David, PVH,
$4.5 billion market cap company.
Tommy Hilfiger.
That was
what is that?
weird. I don't have any idea. Explain
sweaters? Is it about sweaters? Is that what it's come down to?
Well, it's designed not to escalate, like you said, Jim.
Right. I mean, this is, if you had to pick something that would say, you know what, we're not going after you. And by the way, farm equipment, the deer charges a fortune everywhere, so that's the tariffs already. The tariff of deer is way too high because I'm trying to buy deer. It's like ridiculous how expensive it is in Europe. But David, what they're saying, I think, is, you know what, common ground here. We're gonna hit you on some things that aren't gonna hurt you. Let's talk, and that's what this is. Versus say $115 billion in Canadian traffic in oil and gas.
Right.
You know, there it's very central to their country. Here, I mean, it isn't like we threw a, you know, look, I mean, what do you want to do? You want to put a tariff on, I don't know, men's shoes?
Okay.
Yeah, but I'm saying I'm trying to think of something that there's fungible.
No, I understand, and that's the key theme here is that perhaps it is an olive branch almost to try to negotiate.
It's an olive branch.
We'll see how the market takes it. Obviously, yesterday we got whipsawed with concerns that everything was going into place, and then of course we got the 30-day pause on Mexico, and then eventually Canada.
China is basically saying, look, come on, let's do some talking. Now, the next thing we need to hear is China going to do anything that lessens its friendship with Russia?
Why would it do that?
Well, because I think that the president perceives, thank you, Jeff Simon, for this, the Russians as losers now. And the president does not like losers. I think he'd like to separate China. But there are other people in the White House who just say, listen, Belt and Road, we have to end that. By the way, in the Palantir call, which I know we're going to talk about, which was a fabulously orchestrated call, they talk about China being the enemy. There's
Belt and Road, to the extent that it is a help to certain countries as we pull back on aid, isn't that a vacuum that's created in part that the Chinese can fill?
Okay, so let's go right to the tape. Anna Jermick-Soro, I really apologize for mispronouncing her name. She goes, the Belt and Road Initiative is basically indentured servitude for other countries to the CCP. Well, there you go. That's what they think. I think that's
the they there. Sorry, that's
in the Palantir. I totally agree with that.
Yeah.
I
know there is a belief
I'm a hardliner. I mean,
that ultimately these countries have built up a lot of debt to China, and they prefer to do things not like aid to help people in terms of their health and things of that nature, but much more about building things.
Yes.
Building a giant airport or building, which ultimately could be of help.
But this is a call that is basically something that Henry Kissinger.
All right, so we transitioned in Palantir.
No,
have you
I'm
taken
sorry.
us there already?
No, I didn't mean to do that.
Because we have a very detailed.
I did not mean to do that. Okay? I didn't mean to do it. I was trying to talk about China, and I was using a reference that's in Palantir that I thought was part of their ontology that makes a lot of sense.
Got it.
That's all.
Because
I did not mean to take it there. It's just it's a very powerful call that people have to read.
Well, we're gonna spend plenty of time on Palantir, as you know.
But you know, I think China. I just continue to believe that there are two camps. There's the Navarro camp, his excellent book, which talks about what China is about, which is we are at war. Palantir agrees with that. And then there's the China we want to deal, and we don't know where the president is. We just don't know. We don't know where he is. He's got conflicting voices in the White House saying, look, some saying we're at war, and some saying let's deal.
Let's try to get China's perspective as well for more on these retaliatory tariffs. Let's get to Eunice Yoon in Beijing. Hey, Eunice.
Hey guys, well, China took a totally different approach from Canada and Mexico in regards to Trump's tariffs, which took effect here today. China announced several countermeasures, 10 to 15% tariffs on energy imports, farm gear, as well as trucks, export curbs on tungsten and other rare metals, an antitrust probe on Google, and then blacklisting PVH and alumina. Now, the impact of the measures vary, though for the most part, they don't appear to be very meaningfully damaging. The tariffs on the items that are not major U.S. exports to China. One interesting development, though, is that China did widen the scope of what it's willing to do when it comes to retaliation, basically signaling that it is willing to go specifically after U.S. companies. Overall, though, the move is likely a way for China to gain leverage over President Trump by putting more items onto the negotiating table if it does indeed turn out to have a larger trade negotiation with President Trump.
Eunice, what do we make of the unreliables list? We were talking about these two companies that, you know, PVH is a relatively small company, Illumina, and then the move against Google, which, as far as I can remember, has not really had an operating presence in China for quite some time.
Right. Well, PVH had been flagged before for discrimination, the Chinese have said, against certain Chinese products, more specifically Xinjiang cotton. So the way that PVH as well as Illumina would be impacted is that this now means that their business in China will be restricted and that they could potentially have fines. So it's not very clear exactly what how that's all going to pan out, because it doesn't necessarily mean that the punishments come in right away. So the Chinese government keeps it relatively gray. In that way, they could, do what they want at the end of the day with PVH. When it comes to Google, the reports that have been coming out is that it's not necessarily about Google itself, because as you guys well know, Google's blocked here, search engine can't be used. It only has, China accounts for only 1% of its global sales. However, what we might see is the Chinese government go after the Android system here. And so that's kind of the way in which they're being slapped with an anti-monopoly problem.
But Eunice, I think that when we look at what they could have gone after Apple very easily. They could have gone after Nike very easily. They did these analogs that are much less important. Coal, well, we know our coal prices have surged. They actually went down to the core, but there was a surge in coal because of Europe. Liquefied natural gas, these contracts are all spoken for. So if you had to pick things that were de minimis, you would have picked what they did. And what does that say to President Trump?
Right, so it shows that they are starting an opening bid, right? That they don't want to have anything that's particularly damaging to themselves or maybe to President Trump, but they're putting items onto the negotiating table that then they could remove and say that they've done something great. So I think what's going to be interesting is that we know what the Chinese want to see. They want to have the removal of the export controls on tech companies, the restrictions that they see on Chinese companies. They want the removal of the tariffs. But the question I think that a lot of people should be asking is what the Chinese would be really willing to put onto the table to really offer. So, for example, a level playing field, say, for foreign companies, which they might not be willing to do. The subsidization that a lot of countries have been complaining about, distorting global markets. Are the Chinese really going to put those items on the table?
Eunice, thank you. We'll be checking in plenty, I have a feeling. Eunice Yoon in Beijing for us. Bringing things back to here on our markets, of course, we are keeping a close eye on shares of Palantir. They're up sharply in the pre-market. The company's quarterly results and its revenue guidance surpassed what the analysts who followed it had been expecting. That is thanks to, of course, strong demand for its AI-related products. In his letter to shareholders, Palantir CEO Alex Karp wrote, "We are still in the earliest stages, the beginning of the first act of a revolution that will play out over years and decades. We've been preparing for this moment diligently for more than 20 years. Jim, you referenced what you said was an exceptional conference call. The exceptional valuation here doesn't seem to preclude it going far higher, trading at more than 50 times the EBITDA, right?
Right.
I'm sorry, 100 times EBITDA of 26 estimates at this
This is a
point.
company that's measured by the
50 times
Rule of
sales.
40, and it came in Rule of 81, which shows you that the revenue growth and the gross margins are extraordinary. I think that the call itself talked a lot about what the key to Palantir's growth is, which is ontology, meaning it's a core concept within its platform designed to bridge the gap between raw data and actionable insights. So what they do is they do an amazing deep dive on everybody that they have, and they come back with what they should do. And the artificial intelligence here is the king. But what they've really done is kind of just said, look, we can make anybody much better. And the resistance is that you may be stupid. You may not understand. I mean, it's very caustic. Well, look, Karp is caustic. Shyam Sankar is actually he does a lot of defense work. He's brilliant. He's done a lot of good stuff. There's a lot of really important people on the calls talking about what they're doing, say with the Special Operations Command, what they're doing with military, which I wish they would tell you more. But what's incredible is you bring them in and they claim that you pretty much, because of the way that they're set up, can do a dramatic overhaul of your company or dramatic overhaul of the government. And they're working with Doge. And I think that this is a central and existential attack, ultimately not mentioned in the call, on the companies that run our Defense Department. And I'm talking about here Lockheed, I'm talking about Northrop Grumman. I would not want to be those companies after reading this. They should read this conference call because this company is coming for them.
Yeah, well, it now has, I think, the largest market cap of any of those that service the defense industry, at least in a robust way. I mean, listen, the U.S. commercial business, which of course has been growing and has been a focus of investors for some time, up 64%, and growth is accelerating. That, of course, is something that investors always embrace and are willing to pay very high multiples for. I am looking at a very positive note from Morgan Stanley this morning. They had a $95 price target. They upgraded the stock, but 95 is already being surpassed. They were talking about it being 52 times their, enterprise value, over sales for 26, and that's already surpassed as well.
Yeah, I mean, I think that, again, when they talk about ontology, I mean, you do have to read this with I read it with you.com, and I read it with ChatGPT. Now, they think the chat, obviously, they're well beyond chat. I get that. And I didn't mean to be mad at you. I'm not mad at you. I'm just in awe of these guys. And I was trying to reference them. No, I apologize.
I know when you're mad at me.
No, but I mean, I just was, when I went through the call, and I read it several times, and I used to be upset when Alex Karp cursed. I don't even care anymore. That was wrong. I mean, I just can't, because it was like, he didn't need to. I really like him, and I really love this company. And by the way, the defense guy is just extraordinary. And they're going to change the government, and they're working hand in glove with Doge.
And they are. And
working hand in glove.
He discussed it, and we should take a listen to what Karp had to say about the efforts undertaken by Elon Musk and his Doge department.
We love disruption, and whatever's good for America will be good for Americans and very good for Palantir. And I think you got it exactly right. Disruption, in the end of the day, exposes things that aren't working. There'll be ups and downs. There's a revolution. Some people can get their heads cut off. Like, it's like we're expecting to see really unexpected things and to win. Basically, that's what we're going to do. See unexpected things, report expected things, and win. And we're planning to do that, and we're pretty optimistic about the U.S. environment.
It's very powerful.
You made a big point about your call for 100, which we got.
Right, I got it. I
Today, ICE goes to 120.
No, I said at 50. Yeah, absolutely. I said at 50 and was going to go to 100. And I predicted yesterday. I predicted yesterday when it was at 80.
We did the Mad Dash yesterday.
And that is just because I am in awe. Now, the only guy I'm not in contact with Karp. I do just think this Shyam Sankar is really talking about the way the Defense Department has to be redone. When I think that Musk is talking about saving a lot of money, what he's really talking about is you bring an outfit like Palantir in, and they distill what's important, the ontology, and then they go to town. And if you let them have their way, we would save hundreds of billions of dollars.
So you'd be long Palantir, short defense as a pair.
Oh my, I would not want to be a Defense Department contractor, not at all. These guys are too powerful, and they
A lot of that,
they have-
I would imagine too, that some of the consulting services, Bespoke had a list last night of the Doge dogs.
These guys, you give them the key. They're the most patriotic. I know it's like you could say it's way overdone. I don't think so. I'm in awe of these guys. Okay, I mean, I remember there would be a period in my life where I wanted to work at Bain, I wanted to work with a consultant with McKinsey, and I said I want to go to Goldman. I would now, and he wouldn't take me. Alex would say, Jim, you're not smart enough, and that's okay. That's okay. That's how good Palantir is. That's what we did.
When we come back this morning, a ton of earnings to get to as well, including results from Merck and Pfizer. We'll get to PayPal, Pepsi, Spotify, NXP, Estee Lauder. Futures remain mixed here. More Squawk on the Street straight ahead.
Good morning, retail traders.
Insurance.
Take a look at some earnings movers. These are all earnings related, and an interesting mix of guidance trends this morning. Guiding below, Pepsi, NXP, EL, and Merck. Guiding above, we've been over Palantir, but also Cummins today, Spotify, Clorox. We'll get to all of it. We'll get Kramer's Mad Dash. Countdown to the opening bell in just about 9.5 minutes.
right? We got a mad dash coming up, gives us a chance to hit one of the earnings movers. We've got so many to get to, but let's start with Pepsi.
Yeah, Ramon LaGuardia is doing a terrific job as CEO of Pepsi, but the problem here is, again, snacks. And snacks are part of either a healthy cohort, the change in people, particularly younger people, shifting to things that are better for you, or it's GLP-1, which I believe will ultimately have about 40 million people on it between 12 and 13 months in persistence. We don't know, but Raymond thinks that it's the healthy, health is here to stay. And remember, they have Frito-Lay, and Frito-Lay is historically solely snacks are not healthy. So they're making smaller sizes, doing baked, they're doing what they can, emphasizing Sabro, and emphasizing a lot of different stuff that I think is good for you, but they don't have enough that's good for you. So you'll see the stock down, it's obviously underperformed, and the question is it a real crisis in that they're producing food that may never be loved again, or is it more faddish, and we just think that the younger people don't want to snack the way they
That's a tough call for the CEO and others at the company.
It is.
I mean, because if you're going to remake your portfolio, that's not an
No, it's not.
an insignificant undertaking.
Now, Raymond, I think, can do a good job. It does yield 3.7. It is
Jimmy called a pull back on
fantastic company.
pull back on
No,
Pepsi.
It can reinvent. But it's the pivot
I gave a
so
lavishing
quickly because
speech
this is
about how
the trend
unhealthy
came out
it
of
was.
COVID. So COVID would come out, and we're snacking at home, right? And then we develop a whole new thesis about our bodies, and this is also in liquor. Liquor is actually far worse. Diageo pulled its guidance this morning. But if you want to buy a high quality company and bet that they will figure what needs to be figured out, it is Pepsi.
All right.
No, it's not a high quality company.
Try and get to
It's a piece of
Spotify,
crap.
We'll get to
Oh, wow.
PayPal, we got KKR, Apollo, UBS, a whole bunch of names as well. And don't forget, you can catch us anytime and anywhere by listening to and following the Squawk on the Street Opening Bell podcast.
Goodbye.
At least over the next few months.
PayPal knifed on earnings. This is when they were pumping up huge. I don't get into these pumps they do. Oh, I got a 30-day 1 hour, is that what that is? I like that. Do I really got a 30-day 1 hour? Sure do. Might have to get rid of my 20-day. It's definitely at a 30-day low. I forgot why they were pumping it up, but they were pumping it for some reason. $15 billion buyback. Fourth quarter revenue rises. Earnings per share a little above equal. That adjusted earnings per share at 119 to 112. They should just come out with one number and that's it, and go with it. 15 billion in repurchase program. So everything beat by margin. How many minutes? We got 2 minutes. Do I have enough time to change socks? Let's see. One of my clocks says 120, 9:26. The other one says 9:29. Okay. So Apple, let's see what the sanctions do on Apple. Here we go. We're off to the races. Let's see where SPX shows up. Tell me how I sound today when I put the voice on. If the voice is if the computer is overpowering my voice. Well, we do have a good spot here on the SPX for the first time, and I don't know when. I can't believe we opened flat. The China came out with some kind of tariffs in case they go through. And I didn't appreciate that bitch from Canada saying they had on CNBC this morning. If I was Trump, I'd go ahead and give them I'd raise it to 25%. She doesn't understand why we're doing it. She's an idiot. Gold's fallen back a little bit. So I'm going to pull up my platforms just in case. So let's look at the bigger chart here on the 15-minute. So we got a solid support at 59.84. That should hold. If not, we'll hit the top of the third crow right here on the 15-minute. So February the 4th. Well, 60-20s. We'll do the 60-25s again. We could go ahead and run on up and hit just under the 200 today for resistance. And that's on the 15-minute, so I'm going to go to the 1 minute. Go to 5-day 1 minute. 5-day 1 minute. Where are you? Yeah, if I was Trump, if I was Trump's advisor, I said, let's stick it to him now. She's heartless. Put it on that head and shoulders. Okay, get ready. We got to break the 63 and run it up to the 200. The 60s 25s at $8. There's $8 right there. Okay, we're coming back to the 9. If you can get in and right about here. Market's real slow right now. $7.70. I'll put a tight stop on this in case it don't work. That's what I always say. This is my first. Oh, they're back down to 770. Jolts at 10. Oh, that's not a good idea. I noticed my steaks were down today, so I went and bought one. I'll show you the steak that's been costing me $25 to $30. Steak's been running me $25 to $30 here lately in the past 4 years. There's 730, 770, so it's got some volatility right now. I think we're going to pop. Might get one more just for fun if we dip down to 730 again. I'm going to pop and hit that 200, pretty sure of it. Baba. Slash in coups in there's 870, so I'm up $100. Dang, I should have got out of that. I hit my first target. Here it says I got 66,671, and that's right at the 200 for my first resistance on my Ready, Set, Go platform. So I'd advise you to take profit here. I'm going to see if I can get it up to the 200. Right now we're at the 200 EMA. So I talk, like Chris mentioned in YouTube, he says, I learned something off that 200 SMA today, how many times we bounced off of it. Well, we hit it here twice, and it pulled back. And when you come up to like a moving average and you're scalping like that 200 EMA, you want to take your profit. And then recoup, especially first thing in the morning. Then the market this morning with the China tariffs talked about, they said it was just sending a small clear message that we're willing to negotiate because they weren't really heavy. They were restricted on just a few things. It's not like over the board. But what that chick from Canada said, I'd stick it to her. If I was president. Okay, here we go. $7.10. So I know I got two of them. I didn't sell it. I should have sold it. I don't know how I got in that, but it let me. So I got two contracts now. I'm at 1480, so I don't want to exceed 1500 on my first trade. I'm at a real good problem. I'm up $200 right now. I can get out of this trade, but I'm going to see if we can break it and hit that 200, and then I'll get out. I can get out now. I mean, this is 870. Let's do it. Let's just get out of this sucker. $850, $860. I'm liking this. Tesla's hit the first resistance at 389.30, which was a support. off the off my alert, my support. This be the first standard deviation channel. Matches up with mine too, so at 389.68. Tesla. And where's AMD at? I thought I had it on here. Mr. is about to hit resistance at 351.42. SPY hit my overhead resistance today already, just under 598.80. Where is AMD? What happened to my AMD platform? Okay. I don't see it. There it is. We got a double bottom on Meta. Watch Meta. Yeah, I'll keep a good eye on Meta right here. Let's see what Meta's got to say. February 7th. A 7:05 strike. Did I put January on that? I think I did. February 4th. At 540. This is a double bottom. Come on, baby. I'm back to even on my SPX. I should have sold it there. This could be one of them trades where yesterday I regret selling that first one I had. We got a double confirmation that we're going to go hit that 200. Maybe a triple confirmation. If it comes down there and hits a triple top. And if it does break the 200, your next resistance will be right there. PLTR new high. 120's coming. Meta's at 585. I really like that video that Magnificent or somebody shared in the room yesterday with the CEO of PLTR thanking the retail trader. He's thinking about the small guy. Okay, where's my... That's not what I wanted to see. ME/MES. Where's that tick? This is the Micro E Mini S&P 500 /MES. I'm going to start trading these a little bit more. Break it. Okay, here we go. I get out now at 850 and I'll be up 220. But if we break the 200, man, this game could really pay off and be a worth $1,000 piece. But right now is the time you want to think about right here. If you want to learn how to scalp, you get out. I'm out at 890. And of course, it'll break out. But you know what? That's a good profit. And I've got to change that to February the 4th. Very nice. So that's $300 in my pocket. Meta's at 575. And there they go, damn it. 920. So we hit my other resistance level. This ain't going to go higher. You got that channel right there, so that's your resistance right there. You take that wick and line them up. Usually it's the bodies, but now that I have another wick up there, I'm going to go with the wick. Could go with a body, and the body would have worked too. So see if this thing comes back down for me. Yabba dabba doo. We're at 6:15, 6:20 on my call on the Meta. So I'm up $100 on it almost. 90. Meta I liked. The double bottom. So this was a double bottom here. And I call these double bottoms out all the time. And we got to run up and hit the 50 SMA. Maybe the 200. So I'm up $100 on these right now. I can go ahead and sell these too. And that'd be 400 for the day. And I've been here, what, 27 minutes. We're in a market right now where you buy the dip. Like that pullback we had the other day that was run off on the news. And it really wasn't defined yet. The news, it was just the news. Trump's going to put a tariff on Mexico and Canada. Well, it didn't come, it didn't happen. I mean, if it was in the books, it would be a different story. But it was just a mention. It was speculation. And these idiots on Wall Street been whining and grinding about, doesn't even know how Trump works. So yesterday, was it this morning on CNBC, the Russian Steve said, I wish Joe was here because he know how Trump thinks. And if you don't know that by now, and you're a trader, he wrote a book on bargaining. So we're at 670. Type in double bottom. Technical analysis charting pattern that describes a change in trend and the momentum reversal for a prior leading price action. So you had a double bottom higher low. You have the snake breakout pullback. So let's say you missed a breakout. Wait for that pullback on the double bottom. Then you could take it and it will extend to a double top. And a double top's just the opposite. It is also a pattern that could tell you that it's setting for maybe a reversal to the downside. Now we're at 7:05. I mean, this could be an all-day runner, but I don't know. We hit the 50 like I said we would, and I automatically got out at 690. I hit my target, the 50 SMA. So if this thing dips again, did R make one too? Robert? Or different R? Robert's not here. NVIDIA new high. Oop. So YouTubers, my strategies about chart patterns, moving averages, and being in the now. So the chart pattern was a double bottom. The moving average was to hit was the 50 SMA on the 1 minute. And being in the now was the China tariff deal. Knowing it's just speculation. They've not been implemented. If they have, I don't know about it. Damn, I did it again. These things are at $1,100. So I just left $400 on the table. I knew we were getting up there. I just knew it. Panic attack. Shit. $1,100. Watch us hit that 60, 90, and this goes to 15. Or 13. Damn, look at it. I think I've had more success trading SPX than I have any other stock that I've ever traded. Not cutting down Tesla, because I was on a roll with Tesla for years. I traded the first day it was out on the market, back in 2010. All that negativity. Oh, EV cars ain't gonna do nothing. So I went in there and I salted my steak this morning. I got it sitting in the fridge. I'm going to have that with some broccoli. I think I'm going to go in there right now, and I got 3 little potatoes I'm going to steam real fast, and I'll be right back. This thing's at $11.50, so that would have been an excellent trade. That'd have been a grand. Average 740, so I had 1480 in it, and I'd have made $1,000. Instead, I settled for 500. No, 400. 500. No, it wasn't 500. It was 300. And it hit my resistance that I called out, 60, 19, 81. This is called a head and shoulders. You got your left shoulder and your right shoulder and your head. So they usually stop at a shoulder line of a head and shoulders and then pull back. And that could pull back to this previous resistance. And I'm going to put it right here off this here candle and set me an alert so I can take this trade again. Man, 1200. Bitch. 1250. 1290. Woo! $13.10. Ugh. Well, well. Well, well, well. That hurts. Oh my gosh. There's 1,500. 1,500 to the penny. Man. $2,000. I just might as well get used to it. I could be probably worth $10 million by now if I just stuck. There's 15 million. I mean 15 million. 1550. 1590, I mean. And it hit my other resistance. Meta's back at resistance. You still in them, Randy? We hit my last resistance there. If we go higher, it's going to be a miracle. Alex, did you take it? Woo! Very good. You didn't let that runner go away. At least you got something. Now we can come back to the previous resistance, which was the head and shoulders, or the double top, but I'm going to call it the head and shoulders. So I'm going to replace my alert. Now if this thing's in the money, I want to move down out of the money.